Okay, good afternoon, everyone. Welcome to Baiju's Exam Prep IAS. This is Sham Kagod here. Now, before I start the discussion, if there is no issue with the sound, can you please give me a thumbs up? Please do let me know that the sound is coming to you. I'm audible to you so that we can start the discussion. Done? Okay, let's start. Now, before I start, as usual, right, we have started with a new, let's say, a concept last week. I told you every week I'll be giving you a list of articles based on the subject, or let's say based on the concepts we are covering in the last 1 week. So in this week, again, I'm giving you around 12 to 13 articles. I believe around 12 articles are there. It could be more than that as well. Don't worry. But I'm pretty sure it is more than 10. Please read all these articles. Please read all these articles. Some of them are from Hindu, some of them from other newspapers. For example, this article talks about what is happening in regards to cultivation of paddy now. Right, monsoon is having an impact on agriculture sector. So, what is the impact of monsoon on the cultivation of paddy? Right, what has happened? What is likely to happen? Right. Second article is on 81 bond. This week we'll discuss 81 bond, but please focus on one term here before I start. Please focus on one term. Can you see this particular statement? Please read this statement. Please read the statement that I'm underlining. Can you read this statement? The yield on the 10-year benchmark G security. Anybody, please do let me know. You can even magnify it, you can zoom it. Please have a look at it and tell me. Can you read only this one statement? The yield on 10-year benchmark security. Right? What do you mean by benchmark? Benchmark means standard. What is G security? You'll understand it today. Suddenly, I'll say 10-year G security is, right? 10-year G security is a benchmark. Right. So, based on that, please understand 10-year G security or 10-year government bond is very important. Okay. Done. So, the third article is on NSO. Please tell me, have you heard of the term NSO or not? Let me know. Have you heard of the term NSO? Have we discussed or used the term NSO in the classroom? National Statistical Office, right? NSO is a part of MOSPI, which will publish, right, CPI data, which will publish GDP data, etc. Now, last week, Monday, I believe, it was there in the newspaper on Monday. Government of India has announced establishment of a new committee, a new panel to restructure how NSO will conduct surveys, etc., etc. So suddenly the name of the committee can be asked in prelims, right? The importance of NSO can be asked. Please be very careful. Please be very careful. Okay. The fourth article, the yesterday's newspaper, every newspaper yesterday. Government of India has banned now non-basmati white rice export. Now it should not be very difficult for you to understand why is Government of India banning. All of you will understand why is Government of India banning, right, certain quality or let's say certain type of rice from India to rest of the world. Right, the reason is very simple. Government is concerned about what will happen to the supply of this crop in the coming days because of monsoon, unseasonal rainfall, right, a late onset of monsoon, excess monsoon, etc. So Government of India says, right, I'm worried about what would happen to the prices of this kind of a rice variety in the domestic market. It could lead to inflationary trend. So what I'll do is I will ban. Please understand, Government of India is banning the export. There are two ways to control exports. Many of you simply say, sir, we want to promote exports, but the problem is simple here. All of you will agree, more and more exports are good for the economy. Is there anyone who will contest me? Please do let me know. I'm giving you a statement. More the exports, it is good for Indian economy because we will be able to export, we'll be able to earn money, it will promote production in India, it will create employment in India, it will promote investment in India. So export should be promoted. But don't you think if you keep on promoting exports, there could be a shortage in the domestic market? This is the problem. There could be a shortage in the domestic market. So there are two ways to control exports. One, you can impose higher taxes whenever these are exported. Higher customs duty. Higher customs or simple terms, export duty. All of you will agree? If the customs duty or exports duty are increased, let's say 20%, 30%, 40%, right? Don't you think your exports will become costlier now? Anybody has a problem with this? Imagine you're exporting this bottle, 20% tax was there on export. Now it will be increased to 50%. What will happen to bottle price? Bottle price will increase. And when the bottle price increases, what will happen to the exports? The exports automatically will be affected. That is one way to control export, right? Another way to control export is completely ban. Are there any other ways? We'll discuss that. Don't worry. Are there any other ways to control exports? Of course, yes, there are many other ways, right? We'll discuss when I take up international trade. So, Government of India now says, last year I imposed a higher tariff. I imposed higher tariff, but even then the exports of rice variety has increased. Now I'm concerned about inflation in the domestic market. So what I'll do? I'll simply ban. I'll simply prohibit export of certain quality of rice from India. That is just a summation of the article given here. Lessons from twin balance sheet syndrome. We'll discuss twin balance sheet today or tomorrow. Don't worry. After that, you can read this article. Then there is GST network has been merged with the TREDS system. GST network, I hope remember. What is a TREDS system? We'll discuss it today. Under banking chapter, we'll discuss TREDS, so don't worry. Then there is a willful defaulter. What is the concept of a willful defaulter? What has RBI done? Why there's a concern, etc. All of that is there in the newspaper article. Please read it. Black Sea grain deal. Now, please tell me, have you people read about Black Sea grain deal? None of the books will give you this. Don't say, sir, in books it is not given. In NCRT it is not given. It will not be given. It is current affairs. Now, why I have written this under concept of economics? Why the article I have picked up in economics? Reason is simple. If Black Sea grain deal is stopped or is not going to be implemented, exports of fertilizer from Ukraine would be affected. Export of certain agriculture commodity from Ukraine would be affected. And if these exports would be affected, don't you think international prices of agriculture commodities, international prices of fertilizers, etc., would start increasing? Will it have an impact on Indian economy? Think of it. Ultimately, this is the point you need to remember. Will it have an impact on Indian economy? Answer is simply yes. It will have a huge impact on Indian economy. Will it have an impact on African economies? Answer is yes. Right? So that is the reason I've written or I've given this article. Please read this. This is important. Russia has pulled out of Black Sea grain deal, which was very much essential for international market now. Another article, after tomato, now it is the turn of right turmeric prices. The turmeric prices have started right going up, and there is a reason, right? Why I'm giving so many articles related to agriculture? There is a particular reason, right? That is generally whenever there is very good rainfall, is it good for India's agriculture sector? Think of it. If you have sufficient rainfall, is it good for India's agriculture sector? Okay, right, to a certain extent, if distribution is right as per the expectation, if rainfall happens at the right time, if there is no gaps in the monsoon rainfall, right, production would be good. But what if there is excess rainfall? Think of it. What if there is excess rainfall? What if there is a deficit rainfall? Don't you think both of them are dangerous for Indian economy, especially for agriculture sector? One of the reason why we are seeing the prices of agriculture commodities is going up, going down is because of rainfall. And one factor, or let's say one agriculture commodities whose price is increasing now is turmeric. Your household is using turmeric. My household uses turmeric. Now we'll have to bear the higher price burden for even turmeric. Please read this article today. Urban cooperative banks, we'll discuss. I'll tell you what is the importance, why UCBs are in a problem. Same points are given in the newspaper article. Please read it after the discussion on UCB. Right, then there's a TREDS again. Right, please read it. Education loans, PSL, today we will discuss. After that, you read it. NARCL, this weekend we'll discuss it. Please read it after. Infra bond, we'll come back to the concept of infra bond. First and foremost, you need to understand what is the meaning of the term bond. We'll come back to that, don't worry. After that, you can read this article. Now, see, around 15 to 16 articles I've given from the last 1.5 weeks from different newspapers. That's the reason this is my third weekend. I'm telling you this again. Please make it a habit of reading current affairs from Indian economy. Do not make an exemption to economy. Please make it a habit to read Indian economy current affairs from newspapers. Done. So questions are left out. We'll come back to the questions of inflation. Don't worry. I'll cover everything. You don't have to be worried. Don't say, sir, you're not covering questions, etc. I'll cover whatever have come. We'll discuss it. Now, coming to the discussion. What we have done last week, we have covered taxation chapter. Correct or wrong? We have covered taxation chapter. In taxation, what we have discussed, what do you mean by tax? What are the different forms of taxation? Different classification of taxation, then certain types of direct taxes, certain types of indirect taxes. And we have studied the concept of a gross, I'm sorry, uh, goods and services tax, right? I was talking about GDP, but no, I'm supposed to talk about GST, right? The goods and service tax in detail. What is GST? Why we have implemented GST? What was the problem with the earlier taxation structure? How GST is better compared to earlier taxation structure, right? Why do we call it as a dual, right? Dual rate of taxation under GST? What are the different slabs under GST? What are the concerns regarding GST, right? And what should be done in order to address the issues related to GST? Done. Now let me continue. What are the reforms? Let me know. This is where we stopped last week. Please do let me know. Right? This is where I believe we have stopped the last week. Right? So let me continue from there. Certain types of reforms in the taxation. And please understand, goods and services tax is also a reform. One of the biggest reform, we have completed that. Right? One another reform is transparent taxation, honoring the honest. A new initiative has been launched by the government, transparent taxation, honoring the honest. Now, what do you mean by transparent taxation honoring the honest? Government launched this initiative back in 2020. Under this initiative, government says they want to promote efficiency. They want to increase, right, the accountability of the tax officials. They want to introduce higher transparency in the system, etc. Now, many of you will ask me, sir, how? How efficiency will be improved? How transparency will take place? How accountability will increase, etc. Now, let me explain. There are three very important pillars under this initiative of transparent taxation. One is called as a faceless assessment. Second one is called as a faceless appeal. Third one is a taxpayer charter. Now, let's go one by one. What do you mean by faceless assessment? Now, simple example, let me start with one. Imagine I'm an income earner. I will tell the government I've earned income of 10 lakh rupees and right, I will claim certain deductions, exemptions, etc. Then I will simply pay a tax of 1 lakh rupees. Understand the example carefully. Don't buy hard numbers. Do not buy hard numbers here. Understand the example. What I'm saying is, imagine you're the tax official. I'm telling you, this year I earned an income of 10 lakh rupees and I will claim certain deductions, exemptions, etc. And I'll pay an income tax of 1 lakh rupees. Now, please tell me, as part of the government of India, how will you find out whether the data that I'm telling you, whether the taxes I'm paying you, whether all of this is correct or not? Please do let me know. Participate and let me know. How will you find out whether this number that I'm telling you, that income is this much and the deduction is this much and 1 lakh rupees is the payment of income taxes, whether this is correct or wrong? How will you find out? You tell me, how will you find out? You will ask me for documentations. All of you will agree? You will ask me to submit documents. Simple. Now that is what you're doing. And those people who are paying income taxes, you are supposed to file the income tax returns by 31st of July. Yes or no? I'm pretty sure those who are earning income, you might be getting certain messages from income tax department now. You might be getting mail also from the income tax department saying that don't wait for the last day. There'll be a lot of rush. Server problem will be there. File the income tax documents and now itself. Now, what is this idea? Simple argument. You are the tax official. I'll submit all the documents. Some of you saying pay slips are provided. My dear, pay slips are part of the documentation. Part of the documentation, because pay slips will prove how much income you have earned. Right. But what about your, let's say, interest earnings on bank deposits? What about your right capital gains from the stock market? What about your Section 80C contributions to public provident fund? What about your Section 24, right, where interest you are paying on your housing loan? So there are a lot of documents, right? Don't worry about it. There are a lot of documents. So what I'll do, I'll submit all the documents to you. Now you will go through all the documents and you will make a judgment, right? Assessment is nothing but a conclusion or a judgment. Is it okay? Assessment simply means you are making a conclusion or you are coming to a judgment. You are arriving at a judgment. Judgment regarding what? Judgment or conclusion regarding whether the information that I've provided, is it correct or wrong? Whether the taxes I've provided or paid, correct or wrong. This process is called as assessment. Now please tell me, if you know these are my documents and if I know you are the tax official, is there a scope of corruption in the system? Let me know. Is there a scope of corruption in the system or not? Think of it. Right? I know you are the tax official who is going to look into my documents, and you know these are my documents, right? You can easily find out name is Mr. Sham, PAN number is this much, mobile number is this, address is this. If you know my details and if I know that you are the official who is going to look into my documents, is there a scope of corruption in the system? And if there's a corruption in the system, taxes are evaded, taxes are avoided, don't you think government will end up losing lot of tax revenue? How do you address it then? How do you address it? Simple. Now Government of India says we'll introduce a system called as faceless assessment. It is called as a faceless assessment system. What happens in a faceless assessment system? I will file my income tax returns, that is I'll submit my income tax returns using a centralized system. I will not submit physical documents. I will use a centralized system. I will submit my documents online. Now, all these documents will go to Regional Faceless Assessment Center, RFAC, Regional Faceless Assessment Center. From the Regional Faceless Assessment Center, these documents, the identity of the taxpayer will be hidden. I'll repeat, identity, that is what is my name, what is my address, all those details will be hidden and only the documents will be given to tax official. Now, please tell me, if the identity of the taxpayer is hidden and the documents are given to you, can you find out whose tax documents these are? Or can I find out to whom or to which tax official my documents have gone? Now, it is not possible. Please tell me, if it is not possible, point number one. As a tax official, will you look at all the documents honestly? If there is any problem, if there is any tax avoidance, any tax evasion, will you not flag it? As a result of all of this, one, transparency in the system will increase, accountability on the tax officials will increase, and the tax revenues collected by the government are expected to be higher now. This is faceless assessment. Faceless assessment. Second one is called as a faceless appeal. Now, what do you mean by faceless appeal? Imagine my documents have come to you without any identification. The documents have been given to you. Now you look at all the documents and you will simply say, this person has, right, basically disclosed the income of 10 lakh rupees. But in our system, it shows that he has earned interest on certain fixed deposit. He has not disclosed that. As per our system, he is also earning certain rental income. He has not disclosed that information, which means, right, the person's payment of income taxes is not correct. It should be higher, but the person is avoiding taxes, evading taxes. Now, what you will do? You will flag the issue. You'll simply send this document to another center, another official, who will be sending again through a centralized system through a centralized system, through a regional center, now a tax notice will be sent to me. Notice means a demand, right? I have filed income taxes, but there are certain discrepancies. A notice or a tax demand will be sent to me. Now, I will not take this tax notice, run to the income tax officer. I don't have to do that. Why? Think of it again. Imagine a tax notice has come to me. I am I'm not very well educated. I'm very much afraid of government officials. Now I'll take this document, come to you. Please tell me, is there a scope of corruption in the system again? Let me know. Is there a scope of corruption in the system or not because of this again? Will the tax officials be very gentle or let's say very friendly to the taxpayers? No, they'll be very harsh. They will treat this person as a criminal only most of the times. Again, not all the times, not everybody is like that. This is the general observation. So tax officers are not known to be very friendly, welcoming to the common man. So government says, let me erase that system, let me remove that system. Now what will happen in the new system? If there is in fact a tax demand, the notice will not be sent physically to the taxpayer. A mail will be sent to the registered email ID. Simple. A mail will be sent to the registered email ID. Message will come to your registered mobile number. Now you will have to go to the website and appeal against this order. They say you will have to pay 1.5 lakh rupees. The income tax official says you will have to pay 1.5 lakh. You have paid only 1 lakh rupees. Now you will have to appeal against it. It has to be done online. You do not have to go to the officer. You do not have to go to the office. You can sit in your home and make an appeal against this order, tax demand of the government official. This is called as a faceless appeals system. And because the taxpayer as well as the tax officials are do not coming in touch with each other, they are not having any face-to-face interaction. The taxpayer's identity is not revealed to the tax official, and the taxpayer's identity is not revealed to the taxpayer. That is the reason this system is called as a faceless system. And with this, we want to increase the efficiency of the taxation system. We want to make it much more easier for the common man to file the income tax returns, make an appeal against it. We want to basically increase the accountability on the tax officials. So this is faceless assessment, faceless appeal. The next one is a taxpayer charter. Charter is basically a document. Is it okay? Charter simply means a document. Now, in this document, before I go forward, please tell me, at least for some of you, polity lectures are over? Yes or no? At least for some of you, not all of you. Right? If it is not over, it will be done. Right? Don't enter into panic mode right now. So, polity lectures are over. In polity classes, have you come across the concept of directive principles of state policy? Have you come across fundamental duties? What is a fundamental duty? Fundamental duty is basically a document. In fundamental duties, it says what you are supposed to do, what I'm supposed to do. Right? It is not a compulsion. What we are supposed to do, that is documented, which is called as a fundamental duties. In the same way, government under the honoring honest system has introduced a document which is called as a taxpayer charter. In the taxpayer charter, it clearly defines what are the commitments of the tax department and what are the duties or the obligations of the taxpayer. For example, if I'm a taxpayer, government says I will have to file income taxes on timely basis. I will have to keep documents for all the expenditures that I'm doing, which I want to claim under the income taxes. I will have to keep documentation for all the investments that I'm doing. Whenever I'm asked to provide these documents, I will have to submit them on time. I will have to be honest to the tax officials, etc. Government says that these are the obligations, the duties of the taxpayer. But on the other side, government also says even the tax department has to do something here. We will have to ensure tax department is very much fair. it is accessible to the common man. It doesn't treat every taxpayer as a criminal. It will provide all the information that is demanded by the taxpayer, etc., etc. So these are some of the obligations of the tax department as well as the taxpayer. Collectively, it is called as a taxpayer charter. Okay, so this is one more very important reform. Please remember this. Now, the last concept under the taxation, the idea of the Laffer curve. Concept of Laffer curve. How a taxpayer is informed about rules, my dear. Government of India says lot of websites have been set up by the government itself. Even income tax department also has its websites. Whatever information you want, you can get it from these kinds of website. Otherwise, if you want to get into touch with an taxpayer or let's say tax official, go to the office. They will provide you all the relevant information. In case of GST itself, even before the GST was implemented, government conducted lot of training programs, right? Government conducted lot of seminars for these taxpayers such as companies, chartered accountants, right? Businesses, traders, so that they are aware of what the government of India is trying to do under the concept of GST. Okay, done. So let me go to the next concept, Laffer curve. Concept of Laffer curve. Please make an observation. Can I say Laffer curve? At least in this graph, Laffer curve is right a downward facing U curve. Please do let me know. I'll give you a statement. Think of it and let me know whether this is correct or not. In this right graphical representation that I've provided here, the Laffer curve is a downward facing U curve. U must be upright like this, but it is not upright. It is a downward facing, right? A downward facing U curve. Now, what is this Laffer curve? What does it talk about? It basically provides connection between the government tax revenue and the government's tax rate. I'll repeat it, right? The connection in Laffer curve is between government tax revenue along the y-axis and along x-axis. It represents government tax rate. Now, what does it actually state? It states that up to certain tax rate, up to certain tax rate, if government will keep on increasing the tax rate, the tax revenue will increase. Observe and tell me whether this is correct or not. Up to a certain tax rate, if government will keep on increasing the tax rate, the government revenues will keep on increasing. But after certain tax rate, this is called as a threshold or optimal tax rate. Please remember this. This is referred to as optimal tax rate. Optimal means the best tax rate. And please remember the next point as well. Many of you will ask me, sir, what is this best tax rate? Please tell me number. The economist who proposed this, right? Arthur Laffer. The name of the economist is Mr. Arthur Laffer. Mr. Arthur Laffer does not define what is the optimal tax rate. He doesn't give a number. For example, he doesn't say 25% is optimal. Absolutely no. He doesn't say 33% is optimal. No. As per the theory proposed by this economist, as long as government will keep on increasing the tax rate, up to certain tax rate, government revenues will keep on increasing. But when you cross this optimal tax rate, your revenue will not increase, rather will start decreasing. I'll explain why, don't worry. But please understand the theory first. The theory simply says you keep on increasing tax rate, your revenue will increase. But if you cross optimal tax rate, your revenues will not increase, it will start decreasing. This is what the theory says. Is it a perfect theory? Absolutely no. This is no way perfect. I'll tell you the drawbacks as well. But let me explain why the economist says so. Imagine the tax rate is 0%. Think of it. Imagine the tax rate is 0%. Now please tell me how much will be the government revenue collection. Let me see basic CSAT concept. Imagine the tax rate is 0%. Tell me how much will be the government revenue collection? 0 rupees. All of you will agree? 0 rupees. Whatever your income could be, tax rate is 0%. So 0 rupees. So it will start at origin. All of you will understand origin? The graph will start from origin. 0% is 0 rupees. It will start from origin. Now, what if I say government will increase the income tax rate from 0% to 5%? Please tell me, will the government tax revenue increase or not? If the government will increase the tax rate from 0% to 5%, will the government revenues increase? What if from 5% it is increased to 10%? From 5 it is made 10? Of course, yes. What if it is increased from 10% to 15%? Again, yes. But let's say hypothetically, underline the term hypothetically. Hypothetically means imagine. Hypothetically, the optimal tax rate is 20%. Let's say hypothetically, optimal tax rate is 20%. As per this theory, if government will further increase the tax rate from 15 to 20, the tax revenue collection done by the government will be highest. The tax revenue collection done by the government will be highest. Now, government, if it increases this from 20 to let's say 30%, if they increase this from 20 to 30%, this theory says government revenues will not increase. Rather, the government revenues will start falling down. If they increase from 30 to 40%, further fall down. Now, question is why? Theoretically, they should keep on increasing. But this economist says whenever the government will cross, when the government will cross this optimal tax rate, people will start replacing work with leisure. People will start replacing work with leisure. Right? What do you mean by work with leisure? Leisure means rest. Leisure simply means rest. People, rather than working more, will start taking more and more rest. They will take more leaves. Why? The argument put forward by this theory, or let's say this economist, is that until 20% people were okay. They're saying, okay, 20% we can part away, let the government take it in the form of taxes. But the moment government increases the taxes from let's say 20% to 25, 30, 35, 40, 48, 50, 55%, 70%, people will start realizing that more part of their revenue they are giving it to government. Done? More part of the revenue they are giving it to the government in the form of taxes. And when people will realize that doesn't matter, more I work, I'll pay more taxes to the government, what they will do is they will start replacing, substituting work with leisure. They will start taking more rest now, which means if they're taking more leaves, they are working lesser. When they work lesser, what will happen to their income? Their income will go down. And when the income will go down, what about the taxes collected by the government? The taxes collected by the government automatically will go down. And extreme case scenario, please look at the extreme case scenario. What if I say government will have a tax rate of 100%? Think of it. What if say government will have income tax rate of 100%? That is, whatever you earn, government will take it away. As per the theory, the tax revenue collection of the government should be very high. But will it happen? If government will collect whatever you have earned in the form of taxes, will you even go to work? Don't you think most, or say, let's say all of you will simply say, I will quit. No point in working because whatever I'm earning, I'm giving it to government. So what is the point in earning? So when the government will have 100% tax rate, government will not be collecting any amount of revenue because people will not work. And that is the reason when the tax rate is 100% here, how much will be the tax revenue collected by the government? Government will be collecting again 0 rupee revenue. This is what the Laffer theory or the Laffer curve actually discusses. I'll repeat the concept again. Do not complicate it. There are problems. I'll tell you after the repetition. What does the theory say? If the government will start increasing the tax rate, the tax revenue collected by the government will also keep on increasing. But after the government increases, after it increases the tax rate beyond optimal tax rate, the government revenues will not increase. They will start decreasing because people will start substituting, replacing work with leisure. Revenues of the workers will come down, incomes will come down. Hence, the tax revenues of the government will also come down. But please think of it and tell me now. Do you think only tax rate will determine how much will be government revenues? Think of it and let me know now. I'm talking about the problems with the theory. How many of you believe that only tax rate will determine how much will be government revenues? What if there is a recession in the economy? What if there is a depression in the economy? What if more and more companies are getting shut down because of the pandemic? Doesn't matter. Please understand, doesn't matter. Whatever is the tax rate, what about other factors? Those are saying, yes, sir. Right? I think only tax rate will determine. The key word here is only. The key term here is only. Right? Only tax rate will determine how much revenue will be collected by the government? Absolutely no. Absolutely no. Let me throw a googly at you. What if government of India had increased corporate tax rate from 30% to 50% during pandemic, during COVID? Tell me now, those who are saying, yes, sir, only taxes will determine how much will be the revenue collected. During pandemic, government will increase the tax rate from 30% to 50%. How many of you are how many of you are still under the impression that government will be collecting more money during pandemic? Does it make sense to you? Of course, no. Of course, no. There are so many policies. There are so many policies. This theory doesn't discuss all of it. I hope you understand. This theory doesn't discuss anything. It simply says a tax rate and tax revenue. This is a problem with the theory. Second problem is, what is optimal tax rate? Is there any formula to find it out? No. Has the theory given any optimal tax rate? Again, no. Right? So there is no formula or there is no way to find out what is actually the optimal tax rate. So in that case, what is the use of such a theory? So I hope you understand this. This theory is simple, right? It says increase taxes, earn more, but after certain time period, if you that is tax rate, if you increase the taxes, your revenue will not increase; it will fall. This is a Laffer curve. Done. So this is one more concept related to taxation. Please look into this, revise this. So regarding taxation, we have covered all the important concepts. Some more concepts are there. For example, many of you in the last week were asking me, sir, what do you mean by windfall tax? I'll explain that. Don't worry. Many of you are asking me, sir, what do you mean by the concept of windfall tax? Let me explain this. Whatever concepts are there in the textbook, more than sufficient we have covered. Let me cover one more important concept, the idea of a windfall tax. Now, what do you mean by the term windfall? Understand the term windfall first. Windfall simply means because of other events, not because of your policy, because of certain other events beyond your control, your profits will increase. Any difficulty in understanding the term windfall? I'll repeat it again. Because of certain other events which are not under your control, which are never under your control, because of other events, right? The profits earned by you have increased. This profit that you are earning because of external events, this is called as a windfall. Let me prove it to you. Let me simply prove it to you. Russia-Ukraine war. Russia-Ukraine war. Understand the sequence here? Very important. Russia waged a war, right? Let's say security exercise against Ukraine. Point number one. Now, as a result of this, what happened to the crude oil supply to the international market? Please tell me. What happened to the crude oil supply in the international market? Arey Baba, those who are saying video is stuck, please hit refresh button, no? Please hit refresh button. Only two people are saying video is stuck up. If many people would simply say, sir, video is not there, audio is not there, I will simply say, I'll stop and say, please hit refresh button. Those are saying, two people, sir, video is not there, hit refresh. Okay. So crude oil supply will come down. Point number two. And when crude oil supply will come down, what will happen to prices in the international market? Please tell me. What will happen to prices in the international market? Prices in the international market will go up. Right? This is one point. Remember, this is one point. Let me go to the other side. India imports a lot of crude oil. We have discussed this last week as well. I hope remember this. India imports lot of crude oil. That's a fact, by the way. And we know that we will import crude oil from many countries. Earlier, majority of the crude oil we imported from Middle Eastern countries. Now, what has happened? Russia, many countries have imposed sanctions on Russia. Sanctions means what? Simple, trade relations will not be conducted. Simple, we will not allow exports to go to Russia, will not import anything from Russia. They have imposed the sanctions. G7, have you heard of the acronym? G7, group of, right, the developed 7 countries, that is G7. G7 has imposed the sanctions on Russia. And Russia is unable to sell this crude oil to other countries because of the sanctions. Now, what we have done is, we have started purchasing this crude oil from Russia at discounted prices. We have started purchasing this crude oil from Russia because understand the economics here. If I am a Russian exporter, I am unable to export to any other country because of the sanction. You are an Indian company. Please tell me, will you purchase this crude oil at a very high price or at a lower price? Think of the economics. Think of the economics, by the way. Right? I am not able to export to anybody else. But you are saying, right, China, India, they are saying they will purchase it from me. Can I demand, right, more than international prices? If you say, yes, sir, you should demand more prices, if I demand it, will you purchase it from me? I'll say in the international market per barrel, $80. I want you to pay $90. Then you'll simply say, we will buy it from the other supplier, not from you. And I don't have any option. Nobody else is going to purchase from me. So what I'll do, I will export this crude oil at discounted prices. Now you will bring in the crude oil, import crude oil, both oil marketing companies owned by Government of India as well as private sector companies at lower prices, and they will refine the crude oil. They will simply refine the crude oil. Refining means what? Separating into different components. But when you want to export this, let's say petrol, diesel, oil, etc., to the international market, what has happened to the prices in the international market? Tell me, what has happened to the prices of international market? Price in the international market is very high. Now, if you have bought in or if you have imported this crude from Russia at lower prices, in the international market, the prices are very high. Don't you think your input price, that is your raw material cost, is very low? And the final product price is very high. What will happen to profits? What will happen to your profits? Right? Your profits will start increasing. Anybody has a problem with this? Your profits will start increasing. But your profits which are increasing, is it because of your policy? Think of it. Have you purchased a technology which is cheaper? No. Have you increased the productivity of the labor? No. It is not because of your policy. It is because of certain external factor which is beyond your control. Now, can I say the profits earned by the companies in India will be windfall profits? Let me know. The profits earned by these companies when they will start exporting this, right, petrol to other countries, right, diesel to other countries, they will earn more profits. Can I call this as windfall profits? Answer is yes, by the way. Right now, Government of India says, no way I will allow you to go scot free. I will impose a tax on you, and that tax, my dear, is called as windfall tax. Is it okay? That tax that the government of India is imposing on these companies because they are bringing in Russian oil at discounted prices, they're exporting at a higher price, thereby earning windfall profit. So government of India says, I will not allow you to earn only profit. I will impose more taxes from you and collect it. Right? This tax is called as windfall tax. Done? Any problem in understanding this new concept of windfall tax? And please understand, many of you would have searched for this in the book, getting confused, what is this, etc. Windfall tax is nothing new. I hope you understand. It's nothing new. Government of India is implementing it now. That's a reason this is there in the newspaper. Along with government of India, there are many other countries around the world who already have windfall taxes. But in case of India, this is a new type of a tax which is imposed. Okay. So this is a new concept of taxation. Please be very, very careful. Suddenly UPC can ask you on that. So the questions on taxation we already have done last week. Do you remember this? Don't say you're skipping questions. We have discussed the questions on taxation last week itself. That is Sunday evening post 7:30. Right? Post 7:30, you can check the video also. It is available to you. We have discussed the questions on taxation. So is windfall tax only for government revenue purposes? Yes, government wants to ensure they will earn more amount of tax revenues. And second one is, if government will impose more taxes, don't you think petrol, if it is supposed to be exported, it will become more costly? Think of it. It will become more costly. And there's a concern which has been raised by the government, very valid concern. If you are the company, right, look at this, and I'll ask you a question. If you are a company which is involved in refining of petrol, what if the international prices are much higher compared to prices of petrol in the domestic market? What will you do? Will you supply more in the domestic market or will you export more? I'll ask you the question again, I'll repeat it. You are the company which is involved in refining of petrol. Because of the war between Russia and Ukraine, the prices have further gone up in the international market, and these are comparatively higher than what is the price of petrol in India. Will you not simply keep on exporting in order to earn more profit? Of course, yes. But as a result of that, what will happen to the supply in domestic market? Right? What will happen to the supply in the domestic market? Supply in the domestic market will go down. And don't you think that will cause spike in fuel prices in India? That again, you know what will happen to other parts of the economy, right? You know what will happen to cost of transportation, inflation, etc., etc. You already know that. So that is the reason. That's the reason government of India is imposing more and more taxes whenever windfall profits earned by the companies are higher. Okay, done. So this is a discussion regarding taxation. Any doubts? Any doubts? If anybody has got any kind of a doubt, please do let me know. Otherwise, I'll go to the next chapter. Any kind of a doubt? Can private companies enjoy windfall profits? Anybody can enjoy windfall profits, but government of India says I'm going to impose taxes. Again, related to oil companies. Right now, windfall taxes is applicable on oil companies. Okay. Okay. Let me go to the next one now. Money and banking. Very, very important chapter for prelims, especially for prelims. Right? Why? I'll tell you a very simple exercise. Please check last 5 years question papers. You will not see even a single question in mains examination from this chapter. You can check it. You can correct me if I'm wrong. So in the context of money and banking, if right, let's say 15 questions will come from the preliminary exams from economy, around 4 to 5 will come from money and banking. But for whatever reason, I don't know. I'm not setting up the question paper. I don't know. Whatever reason, so far in the last 5 years, UPSC has not picked up any questions from money and banking in the mains examination. That doesn't mean that you don't have to read the chapter, right? But that is a trend. Now, list of the topics. What I'll be covering. What are the money and types? What do you mean by money? And what are the types of money? The functions of the banking sector, the banking structure in India, Reserve Bank of India. This is very, very important. RBI is very important. Issue of bank mergers, lending rate regime, Basel guidelines, certain committees, non-performing asset. In the last 2 months, NPA has been there in the discussion. We'll understand it. Differentiated banks such as payment bank and small finance bank. Then questions. Apart from this, we'll also cover NBFC in this chapter. Non-banking financial companies. We'll cover it here. We'll also cover cooperatives as a concept within the chapter, that is cooperative banking within this chapter itself. Now let me start. Right, let me start with the basic idea of money and types of money. Now, many of you have used money, and rather than saying many, all of you have used money. Either notes or coins, you have used money. But is it okay if I give you the simplest definition of money? The most simplest. Money is nothing but it is a mode of payment. It is a mode of payment, or else they will also say it is a mode of exchange. Money is nothing but it is a mode of exchange. Now many of you will ask me, sir, what do you mean by mode of payment or mode of exchange? Let me give a very simple example. You will come to the shop and you will purchase this bottle. When you purchase this bottle, can I say transaction is very simple? Step 1, I will sell the bottle to you. Step 2, you will pay the money to me. All of you will agree with me? Anything else is there? Please do let me know. Step 1 is I will hand over the bottle to you. And step 2, you will hand over the money to me. Either cash or a debit card or credit card, or the most famous now, UPI payment. In one or the other form, you have paid money to me. Now, what has happened here? Essentially, what has happened? Can I say exchange has happened here? All of you will agree with me? If there is any problem, please do let me know right now. There is nothing but exchange. Exchange means in one hand, I've given the product to you. In the other hand, I've taken money from you. So for bottle, the exchange is nothing but the money. Now look at the definition and tell me, does it make sense to you? Does the definition of the term money make sense to you? Money is nothing but it is a mode of a payment, or it is a mode of exchange. Now there are different forms of money. Different form of money. Over a period of time, from one form to another form, we have shifted. But right now, the most famous form of money is nothing but fiat money. For example, if you take up your purse, right, if you open your wallet, you will see you will have currency notes or currency coin. For example, I'm starting with the second one directly, then I'll go to the first one, don't worry. Please tell me, can you see a 100 rupee note in my hand? Let me know. Can you see a 100 rupee currency note in my hand? This is nothing but money, right? But why is this called as money? Why will you accept this as money? Why will anybody in the market accept this as money? Because there is a government order. There is a government order. Through the government order, this piece of paper, I hope you understand, through the government order, this piece of paper is given the value of 100 rupees. And let me give you a current affairs example. After September 30th, or let's say after the month of September, imagine you have a piece of paper similar to this, but on this piece of paper, 2000 number is written. After September, mind you. As of now, please tell me, as of the announcement is done, etc., you please tell me, after September, if you have a piece of paper on which 2000 rupee note is written, do you think the market will give a value of 2000 rupees to that? By the way, I'm asking after September. Do you think you'll be able to take that currency note, go to the market, purchase any good on service? Absolutely no. Now you'll ask me, sir, why? How is that possible? So, some of you are saying yes. Those who are saying yes, purchase 2000 rupees note from the market today. Think of it. Right? Go to the market, go to the bank, or if your neighbor, or if you don't get anywhere, come to me. I've got certain 2000 rupee note. I will give you 2000 rupee note, but in return, you'll have to give me, right, other 2000 rupee. That is either in the form of 500 rupee or 100 rupee. You will not have any value after September. Why? Please read newspapers. Right? This is very baffling to me. At least this should not be difficult. You cannot simply say, sir, I did not read newspaper. After September, what is the value of 2000 rupee note? Market is not going to accept it. Why? Through the government order, they have withdrawn the value. The government says we are not going to recognize, we are not going to give value to this piece of paper after that. Right? That's the reason. Please remember, fiat money simply means the money which will derive its value, which will get the value because of the recognition, because of the order of the government. Today, it doesn't matter whichever part of India you want to use this. All of you will agree? Equivalent value in the market is 100. Right? Can you tell me whether in right Jammu and Kashmir this is 50 rupees? No. In Punjab, this is 70 rupees. No. In Karnataka, this is 80. Absolutely no. Government says 100 rupees printed, market value is 100. In return, in exchange, 100 rupee worth of goods and services have to be provided. Throughout India, it is uniform. Is it okay? Right. So that is the meaning of the term fiat money. That is the meaning of the term fiat money. Now, right, understand this carefully. There is a term called as intrinsic value. There is a term called as intrinsic value. Now, what do you mean by intrinsic value? What is the value of this? What is the value of this? Now, can I simply say, if you remove the fiat, if you remove the order of the government, this is simply piece of paper. Let me know. If you remove the order of the government, right, whatever the input, what is the input? What is the raw material? Paper, that's it. Does piece of paper have any value in the market? Does this piece of paper has any value in the market? Right? Very, very negligible. Right? Sometimes experts will simply say absolutely no. On the other hand, I'll give you one more example. Imagine you will take 1 gram of gold and you'll make a coin. You'll take 1 gram of a gold, you'll make a coin of 1 gram of gold. Please tell me, can I say value of this will be equivalent to market price of 1 gram of gold? All of you will agree? Even now, if you're confused, let's take Diwali. Take the example of Diwali. I'm pretty sure in most of your houses, your parents will go to the gold shop, will purchase gold coins where gods or goddesses are there. Right? The gold coins where gods or goddesses are there, right? What is the price of those coins? Price of the coin is nothing but whatever is the component of gold in the coin. If the coin is made of 1 gram, again, don't worry about sir, GST, etc. What is the value of that coin? Market price of the gold. If the coin is made from, let's say, 100 gram of silver, market price of the silver will be equivalent to, right, the coin value. But what if I say, think of this next example. What if I say, on this 1 gram of gold, I will simply write 1 rupee. Think of it. On this 1 gram of gold coin, I will write 1 rupee. Don't you think, can I say, the face value of the coin is lower than intrinsic value of the coin? Think of it and let me know. The face value of the coin is much, much lesser compared to intrinsic value of the coin. All of you will agree? Right? And this is the importance. This is the importance. Why? Sir, why are you discussing all of this? Very recently, Government of India has minted a type of a coin, 75 rupee coins. This was there in the newspaper. Please be very careful. Government very recently has minted a coin, right? Because of 75 years of independence. Very simple argument. Right? 75 rupee coin. But whatever raw materials they have used, these have a much higher market price. Do you think government will issue these coins for circulation basis? Think of it now. Right? Imagine this 75 rupee coin is made up of, let's say, 50% silver. Do you think Government of India will issue these coins for circulation purposes? if government issues them, right? Think of it. Don't you think people will simply purchase these coins, keep it with themselves? Does it make sense to you? People will purchase all these coins and simply keep it themselves. Why? If out of whatever the weight is, 50% is silver, that 50% market price of the silver will be much more than 75 rupees itself. That is the reason these coins are called as commemorative coins. Is it okay? These are referred to as commemorative. Commemorative means basically to signify a particular date, signify a particular place, to represent an event. These are called as commemorative coins. Right now, all of you will understand what is the meaning of the term fiat money. Any problem with the term fiat money, please do let me know. The value, right? The money derives the value only because government order. Government will give the order. Second, these currency notes or coins do not have intrinsic value. Whatever is the value, it is because of the government order. It has a very high liquidity. There is one more technical term, liquidity. Now, what do you mean by the term liquidity here? Please understand the term liquidity. Liquidity, in this context, we are talking for an asset. We are talking for an asset. What is the meaning of the term liquidity of an asset? It means how quickly the asset can be converted into money. How quickly asset can be converted into money. I'll give you examples. Just give me a minute. How quickly asset can be converted into money. That feature is called as liquidity of an asset. For example, imagine you have a piece of land and the value of the land is, let's say, 2 crore rupees. Is it okay if I say land is nothing but asset for you? And on the other hand, you also have a bank account. You also have a bank account wherein you have, let's say, same number, 2 crore rupees. You are Karodpati now, right? So 2 crore worth of land and 2 crore in your bank account. Please tell me, between both of them, which has a higher liquidity? Is it number one or number two? Between both of them, which has a higher liquidity? All of you will agree, the bank account, the money. Are some of you saying yes? One is correct. No, you are wrong, my dear. Liquidity means what? Right? Please understand the definition. How quickly the asset can be converted into money. Here, this is an asset. Even the bank account is an asset, by the way, for you. Don't say, sir, bank account is not an asset. Bank account is also an asset. You have 2 crore rupees worth of land and you have 2 crore rupees in your bank account. According to you, the asset, that is land, can be converted quickly into money compared to cash in your bank account. Answer me now at least. According to you, right, the land can be quickly converted into money compared to cash in your bank account. How? How? Think of it. Doesn't make any rationality. Don't you think quickly, right? Very quickly you can get the money from your bank account. Very quickly you can get the money from your bank account. And don't you think because of that, I'll say the bank account has a higher liquidity compared to, right, the land. Any problem with this? Can I also write one more example? What about cash in your bank account compared to gold? Okay. What about the cash in your bank account compared to gold? Please tell me which has a higher liquidity. Is it a bank account or the gold that you hold in your hand? Do not be confused. The bank account will have a higher liquidity compared to gold. Because gold, you will have to convert that into money. In the bank account, you can directly get the money. Simple idea. Okay. I'll give you one more example. What about a savings bank account and a fixed deposit bank account? Think of it and answer. What about savings bank account and fixed deposit account? Which of the two, right, do you think will have a higher liquidity? Right? Is it okay if I write like this? savings bank account will have a higher liquidity compared to fixed deposit. Any problem with the term liquidity at least now? Any problem with the term liquidity? Now tell me, you have 100 rupee cash in your hand. I repeat, you have 100 rupee cash in your hand. Can I say the cash has a highest liquidity? I'll repeat it again. You have 100 rupee cash in your hand. Can I say cash has a highest liquidity? Why? You don't need to convert. Some of you are saying no. Why? Those who are saying no, please tell me, because answer is yes, by the way. Answer is yes, right? Why? Liquidity of your asset simply means how quickly you can convert this into money. I am saying you have 100 rupee in your hand. Do you need to convert it? Tell me, do you need to convert this? No. Can you take this, go to the market, purchase anything from the market? Answer is yes. You don't need to convert this. So I'll simply say the cash that you people have has the highest liquidity. It has highest liquidity because this is already in the form of money. You don't have to convert this into anything else. Right now, come back to the slide. Let me know. Has a very high liquidity. That is the third feature. What are the examples of fiat money? Examples are coins, the currency coins that we are having, or currency notes. Notes are also referred to as bills. Western, right? In Western economies, they will call these notes, the currency note. They will say $100 bill, $50 bill, $10 bill, right? So bills or notes. Now come to the first type of money, commodity money, right? Commodity money. Now before I start, commodity means anything that is produced which can be sold in the market. Anything that is produced which can be sold in the market. For example, gold. Example, crude oil, right? Silver. These are very famous commodities. Now earlier, right? That is to begin with, we had a barter system. All of you heard of the term barter system? Is there anyone who says for the first time I'm hearing the term barter system? Not in economic classes, but in high school. In your high school at least. Barter means if I'm having, let's say, coconuts, I will sell coconuts and I'll purchase, let's say, apples. That is a barter system, right? Good or a service in exchange for good or a service. Simple, right? On one side, a good or a service will be sold and a good or a service will be purchased. That is called as a barter system. But there is a problem with the barter system. There's a very big problem with the barter system, right? What is the problem with the barter system? Imagine I have, let's say I'll take a very simple example. I have rice. I have rice. I want to sell rice and I want to purchase apple. Done? I have rice. I want to sell rice. I will have to purchase apple. Now, don't you think in such a situation, I will have to search in the market the person who wants to purchase a rice and who wants to sell apple? All of you agree? Right? In barter system, if I have rice, I want to sell rice, so I will have to find out in the market who is willing to purchase rice. Is it sufficient? No. If I want to purchase apples, then the person who is willing to purchase rice must be willing to sell apple. This is called as a double coincidence of wants. Double coincidence, right? Which means both the parties will have to agree. I will sell rice, other person has to agree to purchase rice. I want to purchase apple, other party has to sell apple to me. Double coincidence. Don't you think that's difficult in the market? Very, very difficult to achieve many of the times. In case of money, what will happen? I will sell rice, I will have money. That is, let's say, fiat money. 100 rupees I'll get. Now I'll take 100 rupee, go to the market, pay 100 rupee and purchase apple. Now tell me, will the fiat money promote transactions or not? Think of it. Will the fiat money promote transactions or not? Of course, yes. On the other side, there is one more very important feature. The fiat money we also say is a store of value. The fiat money is a store of value. What do you mean by store of value? Today, let's say I've cultivated apple. Can I store apple for 1 month? Can I store the apple for 6 months? Can I store apple for 1 year? Not possible. They will rot away. They'll simply be destroyed. But on the other hand, I will sell the apple, get 100 rupees from you. Can I store this 100 rupee? Let me know. Can I store this 100 rupee? Of course, yes. For 1 year? Yes. For 2 years? Yes. For 10 years? Yes. Assuming, right, government will not demonetize 100 rupee note. So the fiat money, right, is also said to be, or other forms of money are also said to be storing value of the market, right, or having a storage of value. But in barter system, that was not possible. You cannot store value because agriculture commodities, they will rot away. Shelf life is very, very small. That double coincidence of wants is also very important in the barter system. So slowly within the barter system, we started moving away, and there was introduction of commodity money. There was this introduction of commodity money. Right? Let me give you examples of commodity money. When you read history, and I'm pretty sure you've already read even in your high schools, have you come across bronze coins? Please tell me. Have you come across gold coins, silver coins, etc.? Now, what is bronze? What is silver? What is gold? All these are commodities only. So, after barter system, when we moved away from the barter system, we introduced this form of a money where commodities were used to manufacture money. Simple. Commodities were themselves used, right, as money in the market. Beads were used, shells were used, right, as a mode of a payment, a mode of a exchange in the market. Hence, this is called as a commodity money. Now, again, going back to the explanation that I've done earlier, imagine you have used gold to manufacture a coin, right? The gold itself we are using as a money. Can I say whatever is the value of this commodity money, it is because of the intrinsic value? Let me know. I'm talking about gold coins now. I'm talking about silver coins. I'm talking about, let's say, shells, beads, etc. Can I say, because the gold is used for conducting transactions, gold is used for the mode of a payment, can I say whatever is the value of this commodity money, it is because of the gold, right? Because gold is there, and that is nothing but intrinsic value of the money. That is the meaning here. Please remember this. Value of the money is dependent on the intrinsic value of the commodity in the market. It is closely related to the barter system. Examples of commodity money are gold coins, silver coins, bronze coins, beads, shells, etc. Right? This is a concept of commodity money. Today we are not using, right? Today we are not using commodity money. We have shifted rather to the concept of fiat money. Okay? Can we go to the next one? Any problem? How could coins be taken as fiat money? My dear, 1 rupee coin, 2 rupee coin, 5 rupee coin, 10 rupee coin, right? That is a fiat money only. The coin that I'm writing here is 1 rupee, 2 rupee, right? 5 rupee coins. This is nothing but fiat money only. Okay. Next, fiduciary money. Fiduciary money or bank money. Let me go through the points, then I'll give you example. Usually is not declared as a legal tender by the government. Now, what do you mean by this? Let me explain. Two examples. Example one, you have a shop, right? I'll come to a shop. I'll purchase a goods worth 100 rupees. I will pay this 100 rupee note. Can you basically say, I will not accept a 100 rupee note? Think of this. I'll repeat the example again. You have a shop. I'll come to a shop. I'll purchase goods and services worth 100 rupees. I will give you this 100 rupee note. Can you simply say, I will not accept this 100 rupee note? Possibility is there. No, you cannot say that. Why? Government of India itself says 100 rupee note is a legal currency. It can be used for settling transactions. Legal tender means it can be used for settlement of transactions. So there is a trade that is happening, there's a transaction that is happening. I'm settling the transaction using 100 rupee note. But on the other hand, second example, I'll come to a shop. I will basically purchase the same 100 rupees worth of goods. Now, I will write a check to you. I'll open up my checkbook and I'll write 100 rupee right worth of a check to you. I'll tear the check and give it to you. Will you accept it? Second example, is there any compulsion? Underline the term. Is there any compulsion on you to accept it? There is absolutely no compulsion. Because please remember this, the currency coins, currency notes are legal tender in India. What do you mean by legal tender? The money which can be used for settlement of transactions, which can be used to settle debt. But in case of a check, check is not a legal tender. Means if I want to pay the money using a check, it is entirely up to you. I repeat, it is entirely up to you whether to accept it or reject it. And please understand, there could be again two situations there. You will accept it because you have very high confidence on me. Possible or not? You will accept it because you have very high confidence on me. Arey, this person is a faculty. If he gives a check and the check will bounce, police will go catch him, he'll become a criminal. Basically his image will be spoiled. So no, he will not do that. I have very high confidence. On the other hand, some of you might look at it and say, what if he's a faculty? I don't know him. He might simply give a check to me. I will go to the bank, deposit the check, but the account does not have any money. There's a check bounce. So I will not accept it. Now, please tell me, is it entirely dependent on the acceptor of the money whether to accept it or reject it? Is it okay? Does it make sense to you? Can I now say it is entirely dependent? Value of this kind of a money depends upon the confidence shown by the acceptor of the money, not by the issuer, by the acceptor. You will determine should you accept this money or no. If you accept it, the money has value. If you do not accept it, doesn't matter. I might be having a check of a foreign bank. Doesn't matter. You will not give it value. Issuer promises the exchange this with fiat money. What do you mean by this? I will issue a check to you. You will take the check, go to the bank, deposit the check. You will get 100 rupee. Can I simply say the issuer promises, the issuer of the check is promising that you deposit this check, you will get fiat money. Examples of this is the best example is the checks. The checks that are issued or the demand drafts that are issued by the bank. This kind of a money is called as a fiduciary money or bank money. Now the fourth type is called as commercial bank money. Very, very famous now. Commercial bank money. Now, what do you mean by commercial bank money? Before I go forward, let me give you a very simple sequence here. Imagine you have 100 rupee. Imagine you have 100 rupee. You will go to the bank, deposit this 100 rupee. Go to the bank, deposit. Either in the form of a savings account, fixed deposit, or recurring deposit, whatever it is, don't worry. You will deposit the money. First question to you. How many of you think the bank should be allowed to use all the 100 rupee deposit to issue loans? Please think of it very carefully and answer to me. How many of you think the bank should be allowed to use all the 100 rupee money to give loans in the market? Answer is no. The bank should not be allowed. Why? What if the bank will take 100 rupee and give a loan to a businessman? Businessman will run away. The company will shut down. The businessman doesn't repay it. Don't you think bank in search of profits? Of course, they want to earn profit. Bank in search of profit is going to take higher amount of risk with your money. That is the reason. Please remember this. What RBI says, Reserve Bank of India. RBI says part of the deposit collected by the bank, we will not allow the bank to give loans. Will not allow the bank to give loans. I will ask the bank. I will ask the bank. Rather than saying ask, it is a directive. It is an order, by the way. I will ask the bank to keep aside, remove part of it and keep it in the form of reserve. What kind of reserves are there? We'll discuss it later when I take up RBI. Don't worry. So all of you will agree 100 rupees should not be allowed to be used by the bank. Some of it the bank has to keep aside. Right? They cannot use it. The other part they can give it in the form of loan. This is a basic idea. Now, why is this important? Please have a look at the table. Do not by heart the table. Understand my point here. Please do not by heart the table. Table is not important. What is important? Concept. What I'm saying is, A has 100 rupee. A will deposit this 100 rupee with the bank. That is bank 1. And let's say RBI will tell the bank, don't use all the 100 rupee to give loan. Keep aside 10%. I will take a simple number here. Keep right on the side 10%. Do not give it in the form of a loan. So let's say 10 rupee, because 10% of 100 is 10 rupee. The bank will keep aside 10 rupee and use the remaining 90 rupees to give a loan to company A. Now what will the company A do? Company A will take 90 rupees, let's say purchase a machine, purchase raw materials, etc. So if I'm company A, I've taken a loan of 90 rupees from you. I will purchase, let's say, raw material from B. So I will take that 90 rupees, give it to B. Now B has 90 rupees. B will go to the bank to deposit this 90 rupees. Does bank to use all the 90 to give loans? Again, no. 10% they will keep it on the side and they will issue remaining 81 rupees in the form of loan to company C. Now, I've given you only 2 steps. Can we say this will keep on repeating again and again in the banking sector? Let me know. I've given you only 2 steps. Will this keep on happening again and again in the banking sector? In the third step, you can see D has got 81 rupees. D will deposit that in the bank. Bank will keep aside 10% and again issue the remaining amount in the market in the form of loan. Let's say to company E. Company E will purchase something from company F. Right? Again, that money will come back to the banking sector. Reserve will be kept on the side. Remaining money will be given in the form of loan. Please do let me know, is it okay if I say these steps will keep on happening multiple times in the banking sector? Any problem with this? Any problem? Please do let me know. And second question I want to ask you is, look at the picture and tell me, do you think bank is printing money here? Look at the picture and tell me now. Do you think the banks, either bank 1, bank 2, bank 3 or bank 4 or bank 1 again, do you think banks are printing money? No. But can I say banks are creating loans? Let me know. Can I say banks are creating loans in the market? Only this 100 rupee has been used. Only this 100 rupee. That is the first step. This 100 rupee will enter into the banking sector and certain amount of reserve will be kept and credit creation. The term is credit creation is done by the banking sector or loan creation is done by the banking sector. This kind of a money, right, is called as a commercial bank money. The money that is getting created in this banking sector, in this example here, this is called as a commercial bank money. Commercial bank money simply refers to the credit that is created. Credit is nothing but loan. Can I give you one best example? You have a credit card of, let's say, ICICI Bank. You have a credit card of SBI Bank. If you use the credit card and purchase, let's say, a phone in the market, do you think bank has printed that 40,000 rupees? Think of it. Do you think the bank has actually said the manager came running to the office because you're using a credit card in the market and they started printing 1,000 rupee notes or 2,000 rupee note or 500 rupee note because you want to use 40,000. No, what they've done is they've created a loan, created a credit in the market. So this money creation, credit creation done by the banking sector, it is called as a commercial bank money. CBM, commercial bank money. And in the banking sector, commercial banking money is created through a system called as fractional reserve system, FRS. What happens in a fractional reserve system? Right, look at the picture. I'll give you a definition now. The banks will have to keep aside a part of the deposits that they have collected, and the remaining amount they will use it to create credit in the market. I'll repeat the definition. What is a fractional reserve system? Fraction means percentage, part of it. So a small percentage of the deposits collected by the bank will have to be kept in the form of reserve. Remaining part will be used to create credit in the system. This is called as a commercial bank money, CBM. Now we have discussed four types of money. If there is any problem, please do let me know. Otherwise, I'll go to the next. And next is very important, RBI, Reserve Bank of India. Very, very important. Right? One is commodity money. Second one is the fiat money. Third one is right, the commercial bank money. And the fourth one is fiduciary money or bank money. Any problem? Anybody has a doubt? Otherwise, can we go to the next one? If anybody wants to ask the question, please do let me know. What is the meaning of tax rate? Tax rate is how much is the percentage rate, part of your income, you will give it to the government. That is called as a tax rate. Agriculture commodities, are they also commodities? Of course, yes. Right? Agriculture commodities, right, are also commodities only. Checkbook, does it come under fiat money? Fiat money is right. Checkbook is not fiat money. Checkbooks generally come under the concept of fiduciary money. Why Laffer curve is called as Laffer curve? I've told you this. It is named after the economist, Mr. Arthur Laffer. Isn't the name and address written on the document? Yes, I believe you are talking about tax documents. My dear, if you have filed the taxes now, the system has changed. Earlier, you were supposed to submit physical documents. Now you do everything online. The system has become online. You'll have to keep on filling, right, the columns like this. How much you will claim under section 24, how much you'll claim under this, etc. Everything digital now. Okay. Anything else? Anything else? Otherwise, I'll go to the next concept. Any other question that you people have? How tax exemption of employee will control rising inflation? I got this question object to exam. Right? What is the full question? Please do let me know. Right? I cannot answer based on only a simple snippet here. Please do tell me the full context. RBI is not in constitution. I'll come to that. Don't jump to RBI. I'm yet to go to RBI. Okay. Commercial bank money. Arey Baba. You will keep a deposit. You will keep 100 rupee with the bank. The bank is not allowed to use all the 100 rupee to give loan. If you ask me, sir, why does the bank give loan? Please tell me what is the role of the bank then. What is this role of SBI? What is the role of ICICI? What is the role of Punjab National Bank? And basically, it is to collect deposit and to give loan. So the argument is they will collect money. They will not be allowed to use all the deposit, because if they use all the deposit, they are taking very high amount of risk. Part of the deposit, they will keep it on the side. What they will do, I'll tell you that afterwards. Don't worry. Remaining, they will give it as a loan. Now imagine I've taken the loan from the bank where you have kept a deposit. Let's say 80 rupee loan I've taken. What will I do with that 80 rupees? I will have to use it somewhere, no? Right? Don't imagine I'll take a loan and keep quiet. Is there any example that you have seen where people have taken loan, companies have taken loan to keep quiet? Please do let me know. Why do you take a loan? You want to purchase a house. Why do you take a loan? You want to purchase raw material, which means when you have taken the loan, you will purchase and pay money. That money will again come into the bank. Now, again, the bank will use that money to give loan. So, the credit creation is basically being done here. That is commercial bank money. Why drafts are placed under fiduciary money? My dear, demand draft. Right? Will you accept a demand draft when you want to receive payment? Will you accept demand draft? Is it a legal tender? No, demand drafts are not legal tender. Okay, let's go to the next one. Right, the banking structure. Now please look at the banking structure. Observe, do not by heart, observe. It's simple. RBI is the regulator of the banking structure, right? RBI is called as regulator of the banking structure, okay, or banking sector in India. Now, RBI regulates commercial banks. If you ask me, sir, what do you mean by commercial banks? Commercial banks are basically defined under Banking Regulation Act. These are under Banking Regulation Act. And in simple terms, a commercial bank is a type of a bank which will collect a deposit and issue loans. Simple idea. Commercial banks, look at the name only, you'll understand. Commercial banks are those which will collect a deposit and give loans. And all these commercial banks come under the coverage of Banking Regulation Act of 1949. And any bank that is under the Banking Regulation Act of 1949 automatically will come under the regulation of Reserve Bank of India. Now, commercial banks are further divided into two types. Right, one is called as a scheduled commercial bank. Second one is called as a non-scheduled commercial bank. Scheduled commercial banks, all of you will have multiple examples for that. SBI, ICICI, Punjab National Bank, right? All these are nothing but scheduled commercial banks itself. On the other side, I've given you certain examples of non-scheduled commercial banks only for reference purposes. Do not by heart this list. UPSC, will not ask you this. Because in every class, I would simply give this, and I generally don't give this table. There are many students, they'll say, give me example of non-scheduled commercial banks. These are some of the examples of non-scheduled commercial banks. But what is the basic difference between scheduled and non-scheduled? There is an act of Reserve Bank of India. I've told you this in the last class also. RBI Act of 1934. Do you remember this? Reserve Bank of India Act of 1934. Whatever is the functioning of RBI, whatever is the composition of RBI, everything comes under or from the Reserve Bank of India Act of 1934 itself. Now, under the Reserve Bank of India Act, there is a division called as Schedule 2. There is a division under RBI Act which is famously referred to as Schedule 2 of RBI Act. Now, whenever you say scheduled commercial banks, all these scheduled commercial banks are registered under Schedule 2 of RBI Act of 1934. And these non-scheduled banks are not registered under the RBI Act of 1934. That is the second schedule. Now, furthermore, what is the importance of getting registered? In case of India, all of you know this, RBI plays a very important role and provides loans to the banks. Yes or no? RBI provides loans to the banking sector. What way, how much, etc. We'll discuss it in some time. Generally, it is the scheduled commercial banks which are allowed to approach RBI for these kind of loans from Reserve Bank of India. They are simply allowed. They are covered under all of it. This by default is a feature for them the moment they are registered under the Schedule 2. And the non-scheduled banks, the kind of services or the assistance they will get from Reserve Bank of India, it is very much limited. Right? Scheduled commercial banks, they will get lot of assistance from RBI. Non-scheduled banks, not so much. And that is a precise reason. Now, please tell me what you have observed. In case of the economy, do you think it is the scheduled commercial banks which play a greater role, or it is the non-scheduled commercial banks which will play a larger role? Think of it and let me know. Which type of bank do you think is very, very important in terms of Indian economy? Scheduled commercial or non-scheduled commercial? My dear, it is a scheduled commercial banks. Those are saying non-scheduled commercial banks. Tell me, do you see more of a scheduled commercial banks present in the market or non-scheduled commercial banks? At least this should be your observation, right? Have you seen these kind of banks branches spread throughout India, or have you seen SBI, ICICI, Punjab National Bank, right, or Canara Bank, Bank of Baroda? These are all examples of scheduled commercial banks. Right? Don't you think the presence of scheduled commercial banks is much higher, widespread in India compared to non-scheduled? That's the reason. Okay. Okay. So this is basically the division, right? The structure, right, of a banking structure in India. Now come to the most important out of all of them. That is RBI, Reserve Bank of India. This is a logo of RBI, by the way. Reserve Bank of India, logo of RBI. Now, what are the important points regarding RBI? Point number one. It was set up based on recommendations of the committee back in 1934. The name of the committee is Hilton Young Committee. Remember this, okay? Hilton Young Committee. Hilton Young Committee or Hilton Young Commission. Now, in order to set up Reserve Bank of India, Government of India, back in 1934, mind you, back in 1930s, Government of India at that point of time passed a bill, and we introduced or established RBI with the passage of RBI Act of 1934, right? And the RBI started functioning from the 1st of April 1935. Initially, to begin with, the headquarters of Reserve Bank of India was located in Calcutta, but after 2 years, 1937, the headquarters was shifted to Mumbai. Even today, the headquarters of RBI is present in Mumbai itself. Initially, the ownership of RBI was private. That is, Government of India did not have ownership. The private investors were there and they were having ownership of RBI. But 1949, the Reserve Bank of India was nationalized. 1949, the Reserve Bank of India was nationalized. What do you mean by the term nationalization? Please go back. In the first class, I've told you. Nationalization simply means ownership is transferred to the government. So it was established in 1935, shifted to Mumbai in 1937, and right, it was nationalized in 1949. The owner of a Reserve Bank of India is the Government of India today. Okay. Now, apart from this, under RBI Act of 1934, there are certain very important provisions or sections. Please do remember at least some of them based on the presence in the current affairs. For example, please do tell me, have you people come across the surplus transfer of Reserve Bank of India to Government of India? Let me know. Have you people come across the transfer of surplus of Reserve Bank of India to Government of India? Those who are saying no, sir, do me a favor when I give you a break after some time. Do me a favor, simple favor, by the way. Go to the Google, right? In fact, it was there in Hindu also, right? So go to Google and type RBI surplus transfer or RBI dividend transfer to Government of India. And let me know in the last 1 month whether the articles on RBI transfer of dividend or RBI's surplus transfer, was it there in the newspapers or not. You'll be surprised to see, yes, it was there. Why? Simple argument. Financial year is over. All of you agree? Financial year is over. So RBI has earned profit. Part of the profit, right, is given to the government. Anybody has a problem? Please do let me know right now. RBI, right, has earned certain profit. Part of the profit is transferred to government. Now, if you ask me, sir, why are they giving it to government? Please tell me who is the owner of RBI. Think of it and answer. Who is the owner of Reserve Bank of India? Government of India. And profits should go to whom? The profits of right, any entity should go to whom? The owner of the entity. And RBI's owner is Government of India. That is the reason. Okay. Now, Section 3, establishment and incorporation of RBI. Section 4, how much is the capital? Capital means how much money was spent to set up RBI. Section 7, the government, after consulting RBI, will give an order to RBI, will give instruction to RBI. RBI has to follow it. Very important. Please understand this. No doubt, RBI is under the ownership of Government of India. But do you think RBI will simply follow Government of India? Think of it. Think of it and answer. RBI is owned by Government of India. Do you think RBI will simply follow whatever Government of India says? Absolutely no. Why? RBI has a bigger role, much important role in the economy. RBI has to look after inflation. RBI has to look after employment generation. RBI has to look after growth promotion. RBI has to look after safety of the banking sector, safety of the depositors. That is the reason RBI simply doesn't blindly follow Government of India. Many of the times, even in the past, we have seen Government of India wants something. RBI governor says, no, that is not possible from my side. There have been certain frictions. Friction means a difference of opinion between the RBI governors as well as Government of India. So no doubt, RBI is owned by Government of India. But that doesn't mean that whatever Government of India wants, RBI will do. No, that is not how RBI functions. Okay? So section 7, that is where section 7 becomes very important. Under section 7, if Government of India will give an instruction to RBI under this section, RBI cannot reject it. RBI has to follow it. That is the power given to the center under section 7 of RBI Act. Section 8, composition of CBD. I'll show you that. Just give me a minute. Section 17, business carried out by RBI. What should RBI do? Where should they invest their money? Right? What function they should do? All of that is coming under section 17. For example, I'm pretty sure some of you might have thought, why is RBI not involved in real estate? Yes or no? RBI has a lot of money. By the way, RBI has a lot of money. Why is RBI not involved in real estate? Why is RBI not involved in purchasing tomato at lower prices, selling at higher prices? They can make huge amount of profit now. Why is RBI not purchasing turmeric? Because in the coming days, turmeric prices will go. Why is RBI not involved in purchasing of AX investment in Y, etc.? Because please remember this. Whatever RBI does, wherever they invest money, there is a restriction. They cannot willy-nilly decide to do whatever they want to do. The restriction is from section 17. Under section 17, where they are allowed to invest their money, there is a restriction. That is the reason this is important. Section 21, RBI must conduct banking affairs of central government and manage public debt. We'll discuss this. Just give me some time. RBI has exclusive rights to issue currency notes in India. Very important. Please remember this. Please remember, section 22 is very important. Why? Couple of months ago, have you come across this article? Chief Minister, right? One of the chief ministers stated that we should have goddesses and gods photos on our currency notes. Yes or no? You can check it later if you have not read about it. Right? We should have photos of goddess Lakshmi, Ganapati, right? The god of photo of Lord Ganapati in our currency notes, so that right, economy will automatically improve. Now, whether it will improve or not, that is not my avenue. That is not my agenda here. But who is the decision maker? Who should decide? Who will take a call? What currency notes we are supposed to print? How much currency notes we are supposed to print? What photo should be there? It is RBI. It is Reserve Bank of India. But again, understand this also. Can RBI individually, without taking approval from Finance Ministry, decide everything? This is also important. Think of it. Can RBI on its own, without taking approval from Finance Ministry? That's the reason RBI generally, whatever design they want to have, how much money they want to print, before they do that, they will prepare a proposal, send it to the Finance Ministry. Finance Ministry approves it, then they will do it. Right? So these are some of the sections of Reserve Bank of India's Act. Please go through that. Now, within this, there is one section, section 8. Section 8, that is Central Board of Directors. Now, what is a Central Board of Directors? Central Board of Directors is the decision-making authority under RBI. Under RBI, there is a group right? There is a certain number of people, the central board, which will take a decision on behalf of or for Reserve Bank of India. Now, what is the Central Board of Directors? Central Board of Directors, the maximum composition within the RBI Act. What is the composition allowed? 21 members are allowed in the Central Board of Directors. Now, I'll ask you to by heart it this way. Again, I'm advising you whether you want to do this way or other way, left to you. Generally, how do I remember? 1, 4, 10, 4, 1 plus 1. Understand this? 1, 4, 10, 4, 1, and finally add one more. That's it. Right? That is basically it's a mirror image till here. I hope you understand. Till here it's a mirror image. After that there is an addition of 1 right on the extreme right side. What is this? 1, 4, 10, 4, 1, and finally 1. The first one is RBI governor. The first person, the head of RBI, right? It is the RBI governor. Next, up to 4 deputy governors of Reserve Bank of India. Up to 4 deputy governors. Then there are 10 experts. Then there are 4 local boards. One member will be representing these 4 local boards. Hence, 4 members from the local boards. One is the finance secretary. Whoever is the finance secretary becomes a member here. And the other one is economic affairs secretary. And all these appointments, whether this is an expert, whether it is a deputy governor or economic affairs secretary, who will do all of these appointments? It is the government of India. Is it okay? It is the government of India. Government of India will approve all of these appointments. Right? So apart from the central board of directors as well as the local boards, we also have in various places offices of Reserve Bank of India. We have an office in Bangalore, Hyderabad, Kanpur, Jaipur, Jammu, etc. So there are many places where RBI offices are present. So this is the Central Board of Directors composition or the overall RBI structure. Right? This is the CBD under Section 8 of RBI Act of 1934. Now, as I'm speaking, some of you are asking, as expected. Some of you are saying, sir, but in the website, it is not showing 21, it is something else. Right? While you were talking about CBD, I suddenly went to Google, typed the Central Board of Directors. They are showing me the composition. 21 people are not there. You are wrong. My dear, I said the approved membership is 21. Please tell me, will there be certain vacancies or not? What if certain people's retirement age is over? They have retired, a replacement is not done. Certain people term is over, they were appointed only for 3 years, term is over, they are waiting for reappointment. Can this all happen? I hope you understand. Can all of this happen? Of course, yes. So that is the precise reason. Don't just come to a conclusion either they are wrong or I am wrong. I'm just going as per the RB Act of 1934. From one time to another time, all the 21 may be there, may not be there. And that is also possible. Right? So these are certain important points regarding RBI. Now coming to the most important part of RBI, the functions of Reserve Bank of India. This is very, very important. Functions of Reserve Bank of India. What are the functions? Let's go one by one. First one is RBI plays a very important role in covering inflation, in controlling inflation. Anybody has a problem with this? Think of it. Right? Anybody has a problem with the first one? I'm not going to discuss this separately for a simple reason. Look at the bracket here. Please look at the bracket. It is already covered in the inflation chapter. If you don't trust me, open the PPT for inflation. There are 2 or 3 slides on the concept of monetary policy framework agreement. That is inflation targeting concept. So RBI has a very important role, right? Or the function of RBI, one of it is to control inflation now. Now, many other functions are there. We'll have a discussion regarding many other functions. But before that, let's take a small break. But before I take a break, if you have any kind of a doubts or questions regarding what I've discussed, please do let me know. Can RBI governor be reappointed? Of course, yes, they can be reappointed, because please understand, it is entirely up to Government of India. Entirely up to Government of India, right? They can be reappointed, their tenure can be, right, limited. It is entirely up to Government of India. Anything else? Any other questions you have? Otherwise, we can take a break now. Can RBI remove anyone's photograph on the banknote? Yes, they can. They can have a new design. They can send the design to Government of India, that is the Finance Ministry. Once the Finance Ministry will approve the design, they can have the new design. So generally there is a process for it. Okay, what is section 3? My dear, don't do PhD in all of this. Section 3 basically talks about capital of a bank. Capital means what? Money, right? How much is the money held by RBI? Capital. Section 47, I'll tell you about it after some time, don't worry. Again, section 2. Why, my dear? Simply by heart it. Books will not give you all of this. Don't waste your time, right? If I give you one section, doesn't mean you'll have to do a PhD on all of this. Just look at it, by heart it, go forward. That's more than sufficient. RBI full form. RBI full form is the Reserve Bank of India. Reserve Bank of India. RBI full form. Surplus transfer, give me some time, I'll explain that. Ah, anything else? Is there a difference between RBI and Ministry of Finance or printing of currency? If there is a difference, generally you will not come across those differences. You tell me an example. Is there any example in real time that you can tell me? Generally it is not there, right? So don't worry about it. Even if it is there, our Government of India will simply prevail over RBI in terms of money. Is there any criteria for the commercial banks? Criteria for commercial banks to be registered under Schedule 2? Generally, RBI will impose certain conditions. RBI says you will have to have certain minimum amount of capital. Whatever deposits you are going to collect, you will have to use it for these purposes. These kind of restrictions or conditions are imposed by Reserve Bank of India. Okay. Anything else? Any other questions? How much will RBI print? I'll tell you. Don't worry. Don't worry. I'll tell you how much will they print, how will they print, etc. etc. Okay. Okay. Done then. So let's take a break now. Let's take a break. We'll restart at 2 3. We'll restart the discussion at 2 3 p.m. Okay. Take a break. Okay. Good afternoon, everyone. Am I audible? Am I audible? Can we start? Okay, let's start. So, Reserve Bank of India, the first function, we were discussing the functions of RBI. The Reserve Bank of India, the first function is to control inflation. To control inflation, we have already covered it, hence, I'm not going to cover it again. Please look at it. The second very important function, henceforth, we'll have a discussion, detailed discussion for all of them. Printing of currency notes, banker to the government. It is the maker of the monetary policy or credit control policy. It is the banker to the banks, regulator of the banking sector, and it manages forex reserves. Let's go one by one. The second very important function is printing of currency notes. Now, please understand whenever you talk about currency, whenever you are talking about currency, the currency can be in the form of notes, can be in the form of coins. It can be in the form of notes or it can be in the form of coins. The currency notes are printed and distributed. Printed and distributed by RBI. Any problem? I'll repeat it. Right? Currency notes are printed and distributed by RBI. Currency coins are minted by government, and the distribution is done by RBI. I'll repeat it. Any problem, please do let me know right now only. Currency, you can divide the currency into two forms. That is the notes and coins. The currency notes are printed and distributed by Reserve Bank of India. Currency coins are minted by the government, but the distribution is done by RBI, Reserve Bank of India. Point number two. When I say currency notes, all the currency notes are not printed by RBI. The 1 rupee currency note, 1 rupee currency note, it is printed by Ministry of Finance. It is printed by Ministry of Finance. Now, many of you will start asking me, sir, why? Why is that 1 rupee note goes to Government of India and remaining will come to the RBI? Reason is simple. The 1 rupee note, in terms of counting this, the 1 rupee note is not considered as a note. It is considered as a coin. Can you understand my statement? In terms of counting, the 1 rupee note is not counted as a note. It is counted as a coin, right? As per the Coinage Act of India. So, Coinage Act of India says that all the coins are minted by the government of India. All the notes, right? The note printing is done by Reserve Bank of India. And because 1 rupee note is counted as a coin, even that is printed by government of India itself. And please understand the logic here. Between government of India and RBI, don't you think RBI has a better control in the sense, a better sense of how much currency note the whole economy requires? RBI has a better sense of identifying should we supply more money or less amount of money. That is the precise reason currency notes printing and distribution is done by RBI. And even if you look at the value of notes and value of coins, please tell me, is the value of the notes printed higher or value of coins minted higher? Think of it. It should make perfect sense to you, right? The value of notes printed is higher or value of coins minted is higher? Don't you think notes, the printing of the notes is very, very high? If you look at the total money supply in the economy, most of the money is in the form of currency notes or currency bills only. That is the reason the notes printing is given to Reserve Bank of India. But I've already told you this also. Though it is RBI which will print the currency note, it's not that they will take the decision unilaterally. First, they will prepare a report, send it to Government of India, that is the Ministry of Finance, take the approval, then start printing of the currency notes. Now, in what situation the currency notes are printed? Under what circumstances? One, currency notes are printed when the existing currency notes are old. When the currency notes which are there in the circulation, these are old currency notes. And whenever you have old currency note, there are two issues. One, the old currency notes, right, will be torn at many places. Correct? All of you will agree with me? The old currency notes will be having 100 cuts, right? Somebody will be tearing this side, that side, etc., etc. Right? Maybe one of the UPSC aspirant will take the 100 rupee currency note, right? They will see a blank space here. They will write an essay on the currency note. Some of the people will staple currency notes, which is not allowed now because stapling means there is punching. Punching means again the notes can get destroyed. So all of you will agree the old currency notes might become unfit for getting circulated in the economy. People will not accept these currency notes. So you need to replace old currency notes. And I'll give you one more example of a problem with old currency notes. Old currency notes means outdated security features. Correct? Please participate and keep on telling me whether you are understanding or not. Only then I will understand that you are able to understand. So old notes means outdated security features. And when you have outdated security features, don't you think it is very easy to counterfeit these currencies? Counterfeit means fake currencies. When you have old currency notes, it is very easy to make a counterfeit of these currency notes. And that is also precise reason why Reserve Bank of India periodically will keep on removing out old currency notes and introduce a new currency notes. Right, so this is basically the process, right, using which RBI will print and distribute currency notes, government will mint, and the coins are distributed by RBI. Now, in case of India, we have introduced the notes which are called as Gandhi series notes. Now, many of you ask me, sir, what do you mean by Gandhi series notes? Take out any currency note that has been printed in recent times. Please have a look at it. This is called as a front side of the note. This is a front side and this is called as a back side, obverse side of the note. In the front side of the note, please look at it. Tell me whose picture is there in the note. Let me know. In the front side of the currency note, please do let me know whose picture is there in the currency note. You will see that whether this is 5 rupee note or let's say 20 rupee currency note, 500, 100 rupee, or even the 2000 rupee currency note, you will see, you will see the picture of Mahatma Gandhi ji. Earlier, it was not like this. Before 1996, RBI had different types of currency notes. For example, in some of the currency notes, RBI logo used to be there. In some of the currency notes, farmer's photo used to be there. Some of the currency notes insert, right, that is satellite photo used to be there. So there was no uniformity in the currency notes earlier, but post 1996 the only one, that is all the currency notes printed will carry the photo of Mahatma Gandhi ji. Hence these are called as Gandhi series notes. Now, where is the printing of these currency notes conducted? There are 4 printing presses. By heart the names of the printing presses. Right? Trust me, simply by heart the names of the printing presses. The 4 printing presses are at Devas, Nasik, Mysore, and Salbani. Devas is in Madhya Pradesh, Nasik is in Maharashtra, Mysore is in Karnataka, and Salbani is in West Bengal. So these are the 4 printing presses where the printing of currency notes is conducted in India. The first two are owned by Government of India. The first two are owned by Government of India. That is, Government of India set up one company by the name of Securities Printing and Minting Corporation of India Limited, SPMCIL. Long form is there in the slide itself. Please have a look at it. So Government of India set up one authority, SPMCIL, and this SPMCIL has 2 printing presses where currency notes are actually printed. And the next two are owned by Reserve Bank of India through its own subsidiary by the name of Bharatiya Reserve Bank Note Mudran Private Limited, BRBM NMPL, right? That is a Bharatiya Reserve Bank Note Mudran Limited. So the first two are owned by Government of India. The next two are owned by Reserve Bank of India. So these are certain important points regarding currency notes, right? The currency notes, printing, distribution, etc., etc. Why does RBI do it? What kind of currency notes we have, right? All of these points. Any problem? Can we go to the next function of RBI? Let me know. Can we go to the next function of RBI? First one is done, second one is done. Third one is a banker to the government of India. Banker to the government of India. Now, what do you mean by the term banker? It's a very simple term. What do you mean by the term banker? Banker simply means somebody who will provide loans. All of you agree? Somebody who will provide loans to government of India. Now, does RBI provide loans to government of India? Yes. I understand the logic here. RBI does provide loans to government of India. For example, there is a system called as ways and means advances. Ways and means advances. WMA, very, very famous. Please do remember this. Ways and means advances. Under ways and means advances, the government of India, not only government of India, even the state governments, even the state governments can borrow from Reserve Bank of India, can borrow from RBI, but for a very short duration, that is up to 90 days. I will repeat the statement. Under ways and means advances, right? I'm talking about banker to the government. Why does RBI is referred to as a banker? RBI provides loans. I'll tell you one more function. RBI will also help government of India to borrow from market. How does RBI provide loans? There is a system called as ways and means advances. Under ways and means advances, government of India or even for that matter state governments for up to 90 days can borrow from Reserve Bank of India. And because it is a borrowing, RBI will also charge a rate of interest. Right? Generally, it is the repo rate. RBI will charge a repo rate on the borrowings done by the government of India or even for that matter, state governments. Now, some of you will ask me, sir, why? Why do we have this limitation of 90 days? Please understand the differences here. Let me introduce a new concept to you, the term bond. I'll discuss the concept of bond. Please understand this carefully. I'll come back to this, don't worry. There is a term called as a bond. Now, what do you mean by bond? Again, bond is an instrument. Don't go to the James Bond. Bond is an instrument. What is the use of the bond? Bonds are used for borrowing purposes. I repeat, bonds are used for borrowing purposes. So, what do you mean by borrowing purposes? Let me give you a very simple example. Imagine here is a company. Imagine here is a company. All of you will agree if I say company wants to borrow money for various purposes. Anybody is there in the classroom who says, no, sir, company will never borrow money? I'm saying company wants to borrow money from, right, from the market for various purposes. One way they can borrow is go to the bank, take a loan. One way. One way, go to the bank and take a loan. Another way is very simple. The companies are allowed to issue certain instruments in the market, and these instruments are called as bonds. These instruments are referred to as bonds. Now, let me give you a similar example. Similar, not the same. Similar example. And then we'll start replacing. You'll understand what is the meaning of it. All of you, let's assume you have 100 rupees. You have 100 rupees. Now, what you will do? You will take this 100 rupees, approach a bank, keep a fixed deposit. Okay, approach a bank and keep a fixed deposit. Keep a fixed deposit. Now, can I simply say, think of this, right? Let's say fixed deposit for 1 year. Many of you ask me, sir, how much is the duration? Although duration, let's say more than 1 year. Now, based on this information that I've given, can I say bank has borrowed money from you? Let me know. Bank has borrowed money from you for 1 year. Can I also say you have given a loan to the bank for 1 year? Anybody has difficulty here? It's a very simple argument. You have given loan to the bank for 1 year. Bank has taken the money, that is borrowing. Bank has borrowed money from you for 1 year. That's a basic idea. Now, If the bank has taken money from you for 1 year, will they pay interest or not? Think of it. Will they pay any interest to you? Of course, yes, they will pay interest to you. It will vary from one bank to another bank, but yes, they will pay interest. It could be 5, it could be 5.2, whatever the number is. And because they have taken 100 rupees from you, will they give you a piece of paper? Will they give you FD certificate? If you don't trust me, right, your father or your mother would have kept lot of FDs in the bank and the bank would have issued a certificate to them. Can I call this a certificate as an instrument using which bank is borrowing? Please do let me know. Can I say FD is nothing but it's an instrument using which bank is borrowing here? Anybody has a problem with the system? Now what I'll do is I'll start replacing. Instead of bank, I will write either Government of India or a company. Instead of bank, I'll write a Government of India or company. What the Government of India or company can do is, they will, right, have a look at this. They will issue an instrument to you. They will issue an instrument to you. Either it could be to you or me, insurance companies, right? Or it could be for various other banking sector in, let's say, institutions, mutual fund companies, anybody. We will take this instrument and we will give, let's say, 100 rupees either to Government of India or to the company. Now, this instrument which is issued by the Government of India or the company, this is called as a bond. This is called as a bond. Any difficulty? Now, can I say bond is an instrument using which either the Government of India or the company will borrow money? Let me know. Bond is an instrument using which Government of India or the company will borrow money. And borrowing, right? I hope you understand. Borrowing means nothing but they will have to repay the money. They have borrowed money means they will have to repay it, which means they are under debt. The bank or the Government of India is under the debt here. Now look at the two statements in this second example. In the second example, you are a lender, Government of India is a borrower. Any difficulty? Second example, I'm talking about this, by the way. Second one, right side. The second example, you are a lender, Government of India is a borrower. Any problem? And a lender, right? Remember this. A lender, technical term in the market is creditor. A lender is nothing but a creditor. And a borrower is referred to as a debtor. Borrower is a debtor. Any difficulty? Please do let me know right now. It's a very simple process. Government will issue a bond. You will purchase. You will give 100 rupee to Government of India. Let's say the bond has a maturity period of 2 years. Bond has a maturity period of 5 years. And always remember this. Traditionally, the term bond means maturity period of more than 1 year. And what do you mean by maturity period? You will keep FD for 1 year. Can I call FD has a maturity period of 1 year? You will keep FD for 10 years. Can I say maturity period is 10 years? In the same way, government will take 100 rupee from you for 1 year. Maturity period is 1 year. But please remember this. Bonds generally have a maturity period of more than 1 year. For example, 2 years, 5 years, 10 years, 14 years. This is where I want you to read the article that I've given from Economic Times. Infrastructure bonds of a 14-year maturity period. Right? So this is basic idea. Government will issue a bond. Let's say maturity period is 5 years. You will give 100 rupees to Government of India, which means after 5 years, government will give you 100 rupee back. That is the maturity period. But can I also say, in this example itself, Government of India is a debtor, you are a creditor. And by the virtue of giving a credit, will you not expect interest payment? Think of it. Because you have given a loan, you have given a credit, do you want to do you not want to earn any kind of interest? Of course, yes, you should demand interest here. You should say, I want interest on this money. And that is the reason, in the context of the bond, rather than using the term interest, we will use the term coupon. In the context of the bond, rather than using the term interest, we will simply use the term coupon. For example, right, let me show you a picture. Let me show you a picture. Can you see this lower bond? The third one, which is there in the second half of the slide, please do let me know. Right, can you see this lower part of the, right, or let's say the lower part of the slide where the third type of a bond is mentioned here or picture is given? If I say coupon rate is 10%, if I say coupon rate is 10%, please tell me after 1 year, how much money will you get if you're owning this bond? Look at the picture, third picture. Do not complicate it. Please look at the picture. That is the third picture. Please tell me, if the coupon rate is 10%, how much money will you get if you have ownership of this bond? And if you're confused, sir, I'm very much confused, my dear, whatever is written on the bond, this is called as a face value. Whatever is written on the bond, most of you are making mistake, right? Have patience. I'll tell you how it is calculated. I thought you would understand, but don't worry, I'll explain it. Whatever is written on the bond, it is called as a face value. How much is written on the bond? 10 rupee. Please have a look at the first bond here. How much is written in the first bond? How much is the face value? 100 rupee. Correct? Now, whatever is the coupon rate, it is always calculated on the face value of the bond. Whatever the coupon rate, it is calculated on the face value of the bond. In this example, what is the face value? 10 rupee. And what is the coupon rate? 10%. So after 1 year, you will get 1 rupee, right, coupon on this bond. In this example, that is the first left side top, right, the coupon rate is 10%. Let's assume. What is the face value of the bond? Face value of the bond is 100 rupee. So how much interest you will earn on this? 10 rupee. That is how coupon rate is used. Interest rate, coupon rate is nothing but interest rate, is used to calculate the coupon amount or interest amount on the bond. Any difficulty? Any difficulty? Please do let me know. Do not complicate all of these. Some of you might be saying, sir, why you have given old pictures? Why not new bond pictures? I'll tell you the reason for that also. Earlier, government used to issue physical papers like this. All of you understand? Earlier, physical paper, hard paper was issued by the government in the form of bonds. Post 1996, we don't do that. Right? Why? Remember one more term. We have introduced a system called as a dematerialization. We have introduced a system by the name of dematerialization. Look at the term dematerialization. What do you mean by dematerialization? Rather than having physical copy, now digital copies will be given to you. Digital representation is given to you. Right? Even if you have doubt, even now, let me give you a similar example. Imagine I will transfer 10 rupee using UPI. Tell me now, I will transfer 10 rupee using UPI. Does it mean physically I'm giving you 10 rupees? No, from my bank account, 10 rupee will get transferred into your bank account. Your amount will increase by 10 rupee. My amount will decrease by 10 rupee. Or else I'll give you one more example. I'm pretty sure most of you must be having Paytm wallet. Yes or no? Most of you must be having Paytm wallet or PhonePe wallet, whatever wallet you have. If you transfer money from your bank account, do you think literally you are putting 10 rupee physical money into your account? No. Digital amount would be transferred. And if you have 10 rupee in your Paytm account, it's not physical money, it's a digital amount that is present. Right? That is the basic idea. In the same way, dematerialization means rather than giving you a copy like this, rather than giving you a hard copy, hard paper, now everything is a digital copy. And that is the reason you will not find pictures of government bonds, and now physical copies are not issued. Done? So any problem with the term coupon rate here, please do let me know right now. Coupon rate is same as face value. Where have I written it or where have I told it? You tell me. Those who are asking, is the coupon rate same as face value? Did I say that? Did I even utter the term both are equal? No way. I said coupon rate is always calculated using the face value. Face value is 100. Let's say 5% is the coupon rate. 5 rupee will be your interest. Coupon rate is a 7%. Face value is 500. After 1 year, you will earn 35 rupees. That is how coupon rate is calculated. So far, so good, because this is going to get complicated now. Trust me, this is going to get complicated. So far, so good. You know what is the meaning of the term bond now? Any difficulty in understanding the term bond? Bonds are nothing but debt instruments. These are either used by the companies, right, or used by government to borrow from the market. Bonds generally have a maturity period of more than 1 year. And now we are talking about government here. Now we are talking about government. Let me go back to the original discussion that we were doing. Understand the logic behind it. The bonds are issued by the government, and government will offer certain coupon rate on these bonds. This is so far what we have discussed. Now, why I'm discussing all of this, right? We are discussing function of RBI, right? Why I'm discussing all of this? There is a particular reason. RBI is referred as a banker to the government. For one, RBI will give loans for a shorter duration to the government of India. Not only to the government of India, even to the state governments. Second, RBI will help government of India. Underline the term. Because let me show you one more section of RBI here. Right? Please look at section 21. Please look at section 21. We'll have a discussion regarding that now. RBI must conduct banking affairs for the central government and manage public debt. I'll explain everything, but look at the statement. Let's start. Now, what is this RBI maintaining the affairs of government of India and managing the public debt of government of India? Point number one. Every year, government announces budget. Every year, government announces budget. Okay. And in the budget, what generally happens? The expenditure of the expenditure incurred by the government is greater than the income earned by the government. You can make an observation, nothing wrong with that. You look at what government of India says, you will realize it. Every year, government of India will announce a budget. And in the budget, what government will tell you? How much money they are spending, how much money they are earning. And what is a common observation? The government's expenditure will be more than government income. For example, imagine government wants to spend 100 crore rupees, but they are earning only 80 crore rupees. How is that possible? With income of 80 crore rupees, how can you spend 100 crore rupees? That's not possible. So what government will do now is, basically government, that's a second point, government will borrow. Government will borrow. Right? Why they will borrow? Now you have understood the point. Now when you say government will borrow, government can borrow from the domestic market. Government will come to us, will issue bonds to us, we will purchase, will give money to government. Government will issue bonds to public sector banks. Government will sell the bonds to mutual fund companies in India, and they can borrow. And whenever government will borrow from the domestic market, that is internal sources, this kind of a borrowing is called as a domestic debt or internal debt. Any issue here? Whenever they will borrow from right? Rather than writing two times, I'll write it separately. Have a look at this. Whenever they borrow from the domestic market, that is from us, from the banking sector, right, from insurance companies, etc., this kind of a borrowing is called as internal debt. On the other hand, can government also borrow from external sources? Can they borrow from external sources? Can I give you a current affairs example? Sri Lanka has borrowed from IMF. Pakistan has borrowed from IMF. Please tell me, is it internal borrowing or external borrowing? Participate. Participate. IMF has given loan to, right, Sri Lanka. IMF has given loan to Pakistan. Is it an internal borrowing or an external borrowing? It is external borrowing. So government of India might take loan from, let's say, a bank in USA. They might take a loan from, right, let's say, the World Bank. They might take loan from IMF. All of that borrowing, I'll simply call this as external debt. External debt. Now take the sum total of internal and external debt. Will generally refer to this as public debt. Any difficulty? Take the debt, that is the internal debt of government of India, external debt of government of India, club it, will call this as public debt. Any problem, please do let me know. And remember the next point as well. You can look at the overall public debt of government of India. Most of it is internal in nature. I'll repeat the statement. If you look at the public debt breakup, which I will show it to you when I take up budgeting, the budget exercise done by government of India, I'll give you data. You don't have to buy heart tables. I'll show you. You will realize that most of the debt of government of India is internal in nature. Very small part of it, generally around 5% of it, is external in nature. Now the third point is, when you say internal borrowing, the most important source of borrowing is through government securities. Government borrows by selling government securities in the market. Now, what do you mean by government securities? These are nothing but instruments which are issued by the government. These are instruments issued by the government. Issued by government. These are collectively called as government securities. You can use the term government securities or G securities, or there is also one more term, gilt-edged security. Gilt-edged security. Gilt-edged securities. And when I say gilt, it is not G-U-I-L-T. It is not G-U-I-L-T. Don't correct my spelling here. Don't say, sir, spelling mistake. It is G-U-I-L-T. You have written G-I-L-T. Right? I'm not talking about that guilt. The kind of guilt you people have whenever you don't read newspapers, whenever you do not revise economics. I'm not talking about that kind of a guilt. It's a different guilt. And what do you mean by the term guilt here? In the old age, generally you don't find it today. In the old age, when these the bonds were printed and issued like this, in the corner, in all the four corners, they used to provide a coating like this. Have you seen these kind of papers? For example, you must have seen certain invitations. Let me know. Have you seen invitations? Invitations, generally, if these are rectangular in nature, generally in the four corners, they would have done some design like this. Correct? In the same way, imagine government securities, right? A government paper in the four corner, right? There used to be a covering like this, and these are called as a gilt edge, and these are called as gilt edge securities. Now, some of you are asking, show the papers. Why? Why? Where do you think UPSC is going to ask you, right? Draw the picture of gilt security. Not needed. Don't worry about all of this. Hence, these are called as gilt-edged securities. So, government security, G security, or even gilt-edged security, all of them are referring to one and the same thing. Now, whenever you talk about government securities, I can further divide them into two parts. Government securities which will have a maturity period of less than 1 year or up to 1 year, or government securities which will have a maturity period of more than 1 year. So government securities using which government will borrow up to 1 year or less than 1 year, these are referred to as treasury bills. These are referred to as treasury bills. And the government securities using which government will borrow for more than 1 year, these are called as dated securities. And please tell me now, I'll write one more term. Is everyone okay with this? Government securities are also nothing but government bonds. Tell me now. Government securities are also nothing but government bonds. Correct or wrong? Anybody has a doubt why dated securities are referred to as government bonds here? Anybody has a problem? If you say yes sir, I have a problem, which means you are not listening correctly. You are not attentive in the classroom. I told you bonds generally have a maturity period of more than 1 year. Treasury bills, right? Is the maturity period more than 1 year? No, less than 1 year. Whereas look at the maturity period for dated securities: 2 years, 3, 5, 10, 14, 40, 30. Hence, right, these are also referred as government bonds. So, treasury bills, government bonds. Please be very, very careful. Now, let me go forward. What is the role of RBI in all of this? What is the role of RBI? Understand this very carefully. Earlier, 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 what used to happen? Government of India used to sell some of these bonds. Government of India used to sell some of these bonds to Reserve Bank of India. And RBI used to provide money to Government of India. Any problem with the system here? Very simple system. Government of India would sell these bonds to RBI, and RBI used to give money to Government of India. This is called as a direct monetization. This system is called as direct monetization. And there's a problem with the direct monetization. What is the problem? RBI, imagine, will print money, give it to Government of India. Can I say money supply in the economy will increase because of this? I'll repeat it. In the earlier system, right, where RBI purchased the government bonds from Government of India, gave money to Government of India, can I say this led to increased money supply in the system? Any problem? And when the money supply in the economy increases, can it cause inflation? Can it lead to inflationary trend in the economy? Answer is yes, by the way. Right now, none of you are answering. That is a concern for me. Right? Did we not discuss earlier week, that is in the last week, if money supply in the economy increases, it will cause inflation. And what is happening because of direct monetization here? What is happening because of direct monetization? Money supply increases, and that can cause inflation in the market. So should we allow this to continue? That is the reason we do not follow direct monetization in India. How money supply increases, my dear? Right? You're not revising. I don't want to take the names of the students who are asking this question. You are not revising. What do you think government will do with this money? Please tell me. Government will take the money from RBI and keep it with itself. Keep it in the account. Is that the objective of Government of India? They will spend money. If they will start spending money, is it not increased money circulation? Is it not going to increase money supply? It's a very simple sequence. Okay, so that's the reason we have discontinued direct monetization. Only in extreme situations, I'll tell you under the budgeting where it is allowed. Only under extreme situations this is allowed, but generally we will not follow this. Now, what we do? Now, what is allowed? What is generally done? Most of the times, what is done? Follow this very carefully. Here is Government of India. Government of India, let's say, wants to sell government bonds in the market. So, what they will do is they will transfer or they will give these government bonds to RBI. RBI. You will ask me, sir, why? Why are they giving it to RBI? What is the role of RBI here? Simple reason. Government of India, do you think the Prime Minister will go to the market and start selling bonds? Finance Minister will go to the market, start selling bonds? Finance Ministry has experts to sell bonds? Answer is no. Point number one. Point number two, Government of India and every state government already have accounts, just like you have bank account. Government of India and state governments, all of them have accounts with RBI. So now don't you think it makes it much more easier for Government of India to ask RBI to sell bonds, collect the money, transfer the amount into their account? Yes or no? Government of India will simply tell RBI, this is the amount of money I want to borrow. Right? These are the bonds. So Government of India will give these bonds. RBI will sell, collect the money, transfer the money into the account of central government or for that matter state governments. So Government of India will simply ask RBI to sell, to sell or auction these bonds. To sell or auction these bonds, right? Let's say investors, and I'll tell you who will invest in these bonds. Investors. Who are the investors? Individuals. For example, can you purchase government bonds? Answer is yes, by the way. Can I purchase government bonds? Answer is yes. Individuals. Banks. Can SBI purchase these government bonds? Yes. ICICI, Punjab National Bank, right? Or Citibank, if it is there in India, can they purchase these bonds? Answer is again yes. What about insurance companies? Yes, they are also allowed. What about mutual fund companies? They are also allowed. So, lot of these institutional investors as well as individual investors are allowed to participate, purchase these bonds. Now, money will be given to RBI. RBI will transfer the money into the account of government. RBI will transfer the money into the account of government. Can I go forward here? Can I go forward? Auctioning means selling, right? You have heard of IPL auction, selling. Okay. Any problem with the system, with the new system? Please do let me know. Any problem with the new system? Now, look at the difference. Please tell me. Look at the difference and tell me. Do you think in the new system, if Government of India borrows money, money circulation in the economy will increase? Look at it and let me know. Under the new system, if Government of India will borrow, will the money circulation increase? No, not necessarily. New money is not getting printed. New money is not being supplied to the economy. From one side you are taking, from the other side you are again spending money. Whereas here in the earlier system, right, you are not taking the money from me. You are taking money from RBI. And RBI will print money and give it to Government of India, which was not present in the system. That would lead to increased money circulation. Here, you will not observe that. Right? That's the reason today we are using this new system. And this is called as indirect monetization. This is referred to as indirect monetization. Right? The earlier was direct monetization and the second one is indirect monetization. But liquidity increases in the new system. My dear, if government will take 100 rupee from your hand and spend it, is the money supply increasing? Think of it. Government of India will take 100 rupee from your hand and again spend on, let's say, infrastructure. Is it new money system, new money getting created? How? You tell me. If you say yes, how is the new money getting created here? You had 100 rupee, you gave it to Government of India. But in the earlier system, RBI, which is not going to invest, which is not going to purchase tomatoes in the market, it will print money, give 100 rupee to Government of India. That is creation of new money. Right? So, direct monetization only in extreme cases where you will understand when I take a budgeting, indirect monetization is allowed in India. Can we go forward? Any problem with the direct as well as indirect monetization? And all of you will be able to answer why we have discontinued direct monetization, why would prefer indirect monetization. Okay. Government issues bond in the name of government companies? No, my dear. Government of India itself will issue bonds. Companies, they can also issue bonds. Government of India itself will issue bonds. Okay. Now, Government of India can use this method to borrow from the market, and the state governments, remember this, even the state governments can also use this method to issue bonds in the market and borrow from the market. State governments are also allowed to issue bonds and borrow from the market. Now, please understand the next point very carefully. Very carefully. Right? Government of India gives it to RBI, RBI sells it. Government of India will borrow, right? It is not being directly purchased by RBI. You will have to be very clear. Is RBI purchasing? If I write number 1 and number 2, please tell me in the second example, is RBI directly purchasing bonds from the issuer of the bond? Please tell me now. Right? Second point. I'm talking about the second example. Is RBI purchasing the instruments directly from the issuer? No, RBI is not purchasing here. And why it is important? I'll introduce two more concepts to you. One is called as a primary market. Second one is, right, by the name itself you'll understand. One is a primary market and the other one is a secondary market. One is primary market and the other one is secondary market. What do you mean by primary market? Whoever is issuing, very important, whoever is issuer, from the issuer, the investor will purchase. All of you will agree? Whoever is the issuer, from the issuer, investor will purchase. That is called as a primary market. In the secondary market, one investor who has instruments will sell it to another investor. One investor who has instruments will sell it to another investor. I'll give you examples. You tell me which is primary and which is secondary. I have a government bond. I will sell this government bond to you. Is it a primary market or secondary market? I have a government bond. I will sell that government bond to you. Is it a primary market or secondary market? Most of you are correct. Two of you are wrong, my dear. This is not primary market. Who is the issuer of government bond? Arey Baba, how difficult is it? Who is the issuer of government bond? Government is the issuer. But in this example, am I the government? Am I the government? No, I'm an investor. I have purchased the bond. I'm selling it to you. So don't you think this should fall in the secondary market? Any difficulty? This should fall in the secondary market. Let me give you one more example. Think of it and answer. RBI will purchase government bonds from you. RBI will purchase government bonds from you. Is it a primary market or secondary market? Right? Is it a primary market or secondary market? Again, some of you are saying primary market. How? How? Right? What are you listening to? Where are you actually mentally? Right? Those who are saying primary market, revise the answer. It is secondary market. Are Baba. Who is the issuer of government bonds? Same thing again and again. Why? Who is the issuer of government bonds? Government. If I say RBI is purchasing government bonds from you, you are the issuer. You are a seller. You are not the issuer. You are an investor who had purchased a government bond. You are selling the government bond. So it will become secondary market again. Very difficult. How difficult? Who is the issuer? Right? I'll give a very simple example. Adani company will issue shares of Adani company. At least now, Adani company will sell or will issue shares of Adani company to you. Primary market or secondary market? All of you will agree now? Because Adani company is issuing the shares of Adani company. You're purchasing shares directly from the issuer. It has to be primary market. Some of you are saying secondary here also. How? I don't know how to explain now. Adani company is issuing the shares of Adani company. You are saying secondary market. Great. Okay. So primary market, when you purchase it directly from the issuer, it is called as primary market. And when any investor, it could be a bank, it could be, right, the investor, it could be you, it could be me, we are all investors. So when we sell the instrument, somebody else purchases in the market, that is called a secondary market. Now please look at the picture and tell me, is RBI allowed to participate in government bonds primary market? Tell me now. Please look at the picture and tell me, is RBI allowed in the primary market for government bonds? And when I say RBI allowed, means is RBI allowed to purchase? That is what I'm saying. Is RBI allowed to purchase the bonds directly from Government of India? Because Government of India is the issuer. Again, some of you are saying yes. My dear, is RBI allowed to purchase the government bonds directly from Government of India? Those who are saying yes, wake up. You're not listening, right? You're simply wasting time. Wake up. If RBI purchases directly from Government of India, I said it is direct monetization. And are we following direct monetization now? Tell me, are we following direct monetization now? No. I've told all of this. Don't behave as if I've thrown this term. I'm using the term for the first time in front of you. I've already told you all of this. So direct monetization is not allowed. Indirect is allowed. But indirect, is RBI purchasing bonds directly from Government of India? No. If RBI purchases directly from Government of India, it is not indirect. It becomes direct. So right now, in the primary market for government securities, RBI generally doesn't purchase from the government. But in the secondary market, look at the next term. In the secondary market, RBI can purchase a G securities from you. It is allowed. And why will RBI do this? Imagine RBI wants to promote growth. Tell me, if RBI wants to promote growth, one of the ways to promote growth, RBI, I will say, will purchase government securities from you. RBI will purchase government securities from me. RBI will purchase government securities from banking sector. Does it make sense to you? Think of it. I'll repeat the situation, understand the situation. If RBI wants to promote growth, RBI will purchase government securities from you and me, from banking sector, from insurance companies, etc. Why? When RBI will purchase government securities, right, automatically money supply in the economy will increase and interest rates will go down. It will promote growth in the economy. But on the other hand, can I also say RBI in order to control inflation, RBI in order to control inflation, right? Already RBI has purchased a lot of government securities from all of us earlier. Can they sell these government securities again to us in the market? Does it make sense to you? Can they sell these government securities again in the market so that the money supply will go down? Inflation, which was higher, will be controlled now, right? But please understand, where is RBI doing the selling and buying of the government securities? Is RBI doing the buying and selling in the primary market? No. RBI is doing the buying and selling of government securities in the secondary market. Any difficulty? Can we go forward? Any difficulty in understanding this concept? Direct monetization, not allowed. We have discontinued because this will cause inflation. Indirect monetization is allowed, where RBI will, on behalf of Government of India, will auction, sell government securities and will take the money and give it to government. But in the secondary market, whenever the inflation rate is very high or there is a need to promote growth in the secondary market, RBI can participate. And please remember this, whenever RBI will sell or purchase government securities, this is called as open market operation. I'll write it here. Whenever RBI will purchase, right, or sell, I'm just checking whether I've written this statement. Whenever RBI will purchase or sell government securities, this is called as open market operations, OMO, open market operations, buying or selling of government securities, and this is done by whom? RBI. RBI, in order to promote growth, will purchase the government securities from the secondary market, and in order to control inflation, will sell government securities in the secondary market. This is one of the very important functions of Reserve Bank of India. Done. Now, where does RBI sell? Where does RBI purchase? Right? Is there any platform? Is there any market? Is RBI governor? Is RBI governor taking the bond, going to every home and selling? Where? Where does it happen? Please remember this. RBI, whenever they want to sell these government securities, the primary market for this is there is a platform by the name of ECO4A. There is a website. Platform is nothing but a website. RBI set up a platform by the name of ECO4A. Whenever they want to auction these government securities on behalf of Government of India, whenever they want to auction, right, it will auction using this platform ECO4A. And the buying in the secondary market, the buying and selling of these, trading of these G securities will happen in one more platform called as NDSOM. There is one more platform, right? NDSOM, right? What is this NDSOM? The name of this is negotiated negotiated dealing system negotiated dealing system order matching order matching negotiated dealing system, NDSOM. So whenever they want to auction these G securities, they will use a platform by the name of ECO4A. And whenever you want to sell or purchase these G securities, there is one more system by the name of NDSOM. You can log on there and purchase and sell the government securities. Right. So these are very, very important points regarding the role of RBI, in government, right, functioning. Now, please tell me, does the third point make sense to you? Why RBI is referred to as a banker to the government? That is the third point. All that we have discussed is regarding that function only. Does it make sense to you or not? Any problem with the function number 1, function number 2, and function number 3? Anybody has any kind of a doubt, please do let me know. Otherwise, we'll go to the next one. That we'll take it up after the lunch break. There is a lot of technical concepts involved in this. So fifth, my dear, fifth one, did we discuss? Fifth one, have we discussed the fifth one? I've not yet gone to the fifth one. I'm still in the third point. Okay. Subtopics of banker to the government. My dear, RBI will basically manage the public debt of Government of India, help Government of India borrow from the market. In short nature, under the ways and means advances, RBI is also involved in giving loans to Government of India. Okay. Any other doubts? Anybody has any kind of other doubt, please do let me know. How to differentiate between real and fake notes? Right, my dear, this is a very, very, right, common knowledge question, general knowledge question. Have you visited any banking branch? Please do let me know. Have you visited any banking branch? And if you have visited a banking branch, make an observation. Every banking branch will have one, right, let's say notice board. In the notice board, they will tell you what are the security features of new currency note. They will tell you, if you hold it in a particular angle, you will be able to see the photo of Mahatma Gandhiji's in this particular, right, space. You will also see the denomination of 100 rupee here. You will be able to see a silver line running vertically like this, right, etc., etc. This is how you differentiate between, right, what is a counterfeit and what is a original currency note. Any other doubts? In present system, there is no primary market, na sir, because RBI only sell and purchase bonds instead of Government of India. My dear, RBI sells it to people on behalf of Government of India, which means you are purchasing in the primary market. You are purchasing in the primary market, but the sale of it will only happen in the secondary market, that is NDSOM. Okay. Any other doubts? Any other doubt? Point 2 in basics of bond slide. Point 2. Okay. What I've written point 2. Once the bonds are issued, I'll come to this. Right? Anyways, once the bonds are issued, the issuer will provide for a coupon payment. If you purchase a government bond, you will be paid coupon amount. That is the meaning of the second point. That is interest payment. Vishal, I'm giving you a call. Please receive it. Any other doubts? Anybody has any other doubt? Otherwise, we'll take a break then. These lectures are is for prelims or mains? You tell me, my dear. You tell me, are these lectures for prelims or mains? Are we not discussing questions in the prelims, right? Questions in the mains? This basically means we are going to cover both. Okay. Any other questions? Any other questions? Tax rate and interest rate. Did I not explain the tax rate and interest rate earlier? Listen, no then. Tax rate is, right, basically corporate tax rate. Out of your profit, how much will be the rate you're going to pay? Interest rate is, right, generally in the market, if you borrow, how much rate of interest you will pay. Right? So interest rate is a very common term. Very, very common term. Okay, done. Right, let's take a break then. Let's take a break. We'll restart the discussion at 3:45. 3:45 p.m. We'll restart the discussion. Okay, take a break.